let's start it now, Bhaskarji.
Okay.
Right. So
Good.
thank you, Bhaskarji, for taking this initiative and taking this session for all of us to learn Fibonacci. And uh, we all are very well versed. How experienced and knowledgeable you are. We have seen your previous. We have seen you in the previous meetings also. So. A standard disclaimer before we actually start that any stock or index discussed during this call should not be considered as an investment advice. And let's start with Bhaskarji, knowing you better. Tell us about yourself, about your experience, and then we will proceed to the technical part.
Sure. Thanks so much, Puneet. I sincerely hope I do justice to all the effort you have put in and the time people are taking to attend. I suppose you are able to see my presentation?
No.
Sorry. Share. I thought I said share entire screen. Okay. Um, is it visible now?
Yes.
Okay. Thank you. Uh, so whoever have joined, thank you so much for taking your time on a Sunday. I'll start off with a brief introduction about myself. I'm a former IT professional, went into full-time trading slash investing around 2019, end of 2019. And since then, I've been doing this as a full-time initiative and spent a lot of my initial learning time and money and effort in learning FNO for a couple of years. And then over time, I got this realization that no, you cannot build substantial wealth if you are going to be relying on FNO as a vehicle of your choice. So then I shifted my focus into learning on growth investing and started reading every book that I can get hold of around the growth investing and kind of like anchored myself into trading only on the long side and only in the cash trades and still can make some good money. Because often people have this notion that, in a consolidating market and in a downtrending market, a cash trader, long only trader will not be able to make money and hence you need to be trading in FNO. Now that's a good marketing trick to capture all of us, trap all of us into coming into FNO, which is not the best thing that one can do. If you're serious about making wealth, long side cash only is a good enough means of making wealth. A little more on my background. I'm a commerce graduate with master's in computer applications, and I had my IT stint in primarily into the finance ERP systems, more specifically within the BFSI domain, right? So I've played different roles, starting from the route of the developer and then progressing further into various roles. Now, in this last 3 years is when in the 5 years or from 2019, right? I've spent a lot of time reading and all of what the principles of investing and trading that I'm doing currently are influenced from my reading from the books listed below. These are not the only books that I have read, but definitely if there is any semblance of something that I have been able to improvise in my way of working, the inspiration has come from reading these books. So I would strongly encourage anyone who is starting or who has not read any of these books to go ahead and read them, right? Now, from each of these books, I was able to pick up something that helps me fix a certain gap that I had in my trading or my investing. And whenever I struggled with certain aspects of it, I've always gone back to these books and they have helped me fix that gap, that pain point. So that's how I have evolved myself into a investor slash trader. So I would encourage all of you also to have this habit of picking up these timeless, valuable insights from these books and make the most of it in your journey. Okay. So we'll move on. And before I move on, just wanted to add one more comment. It's not necessary that I started to invest only after 2019. I have been an investor from my 12th standard, from my BCom days, because market and investing and all of that were part of my curriculum. And thankfully, my father had a good network of very knowledgeable and well-informed friends that through whom he had done some investments. So I initially, because of my curiosity, I started getting involved in terms of his investing. And then sooner, and when I was in my BCom, I started managing his investments. He had a very busy schedule, so he used to just leave it to me to manage it. And of course, the checks have to be signed by him. The shares that I buy will go in his name. So he had the control, but I had the freedom to make the decision. And looking back, I think that was the best moment of learning, because those few instances or those moments when I lost money, the loss did not hurt me because it was all my father's money. But the learning was very valuable. I could learn a lot, and I was able to be quite profitable in all of those investing in those period of time, with nothing of no a deep knowledge in terms of the fundamentals and zero knowledge on the technicals, but still the stock selection somehow worked in those period of time, and it gave me a kind of an ego boost, got me into myself into the cloud. And after I went full started working professionally, and after I started investing with my own money, I still made money, and I still made a lot more mistakes. And for fixing every mistake, I used to try a different tactic. Sometimes it works, sometimes it doesn't work, but it was all doing and learning, right? So it took a lot of time. And then I realized when I went full time that that is not the approach which is going to help me sustain as a full time trader and an investor. So I started to read these books. And one of the things that hit me very hard, a lesson that I got it while reading these books, is the consistent pattern I noticed in the stocks that had given me a good profit during those days. And all of them had one characteristics or one pattern that was just cannot be ignored, right? So that became the principle on which all of my current investing and trading is relying on. And we will touch base on it as we go along. Part of the reason why I have some slides which are not directly related to Fibonacci is essentially to re-emphasize that pattern that I could notice. So I will move on quickly into the root of this course. And just one small request and a hygiene factor. We have around 30 odd slides. So as we go along, some slides are text heavy. There is a lot of content, and some slides are charts, and which can be interpreted differently by different people. So I have a humble request. If on the stocks, if on the charts that I'm presenting, if you have any questions on the point I'm making, stop me then and there and we can talk about it. If the concepts that I am referring to from the price chart that I'm showing, if you have any question, I'm happy to take it then and there. However, if you have other questions or if you have a related questions on a different price chart or something, I kindly request you to park it aside. And towards the end of it, I promise we will have a Q&A session where you can shoot all those charts and I can definitely take up the question. This will just allow me to run the flow of the conversation while you can also get your doubts clarified that may be beneficial to other learners who are not at your level of expertise. And it will also help in maintaining the rhythm of the whole flow. And I hope this is fine with everyone.
Yes, sir, definitely.
So before we jump into anything further with trading and Fibonacci, using Fibonacci for trading, a little bit of refresher for our knowledge, right? We all would have learned about Fibonacci series in our schools. And very honestly, I was one of them who always wondered, why am I even reading this and how is it beneficial to me and what I'm going to do with my learning of Fibonacci ever in my life. Now that realization is hitting me hard now when this is one of the main tools that I use in my trading and investing. So the sequence is very simple. Starts from 0 and 1, and then every other number is a summation of the preceding two numbers. And this is one very wonderful concept that has been found. And this is really an amazing principle because there is an order in which this whole thing operates, right? Beyond
Basker sir, sorry to interrupt. Is it possible to maximize the slide, run in the F5 mode?
Oh, sure. Sorry.
Thank you so much. Sorry to interrupt.
There's nothing, don't even worry about it. I just need to. Okay, is this good?
Yes, perfect.
Okay, wonderful. Thank you so much. So when you divide a number, and that is like take it beyond 5 or 8 or 13, right? When you divide a number in the series by the number following it, the ratio is more or less 61.8. And I have depicted it as a percentage because that is how we are going to refer to it as we go along. But in terms of the ratio as a percentage, if you look at it, more or less, it will be 61.8. And this 61.8 as a ratio stays consistent throughout the series. And the inverse, if you divide a number in the sequence by the number which precedes it, it's 1.618. So this two ratios hold on consistently throughout the series, right? So this is called a golden mean or a golden ratio. Now, what is golden about this ratio? It's just that anything which is symmetrical in the nature, anything which has a pattern, which is a symmetrical thing in the nature, has this particular ratio in it. A very simple example is if you measure the whole length of your arm, and then if you measure the length of your forearm will be 61.8 of your entire arm's length. So what's great about it? This ratio stays same right from a newly born child right up to a fully grown adult. There is no difference between the people, right? And anything and everything which is symmetrical in the nature, like sunflower patterns and all of that, this ratio is something that can be observed in it. So that's the reason why it is called a golden ratio. And it's not just that this one number division gives this ratio. There are other ratios also which are consistent. And if you divide a number in the sequence by a number which is 2 steps ahead, you are still going to get 38.2 as a percentage, and that stays consistent. 3 steps away, it's going to be 23.6. So that is the beauty of this whole series. The percentages remain consistent. So if you look at the Fibonacci series, there is 23.6, 38.2, 61.8, and then you can derive 76.4, which is nothing but 100 minus 23.6. So it comes to 76.4. So these are the Fibonacci ratios. Now, we traders always do things on our own, right? We don't take anything given and then just blindly do it. We do things on our own. So in a trading and in an investing principle, it is always believed that when a stock moves in one direction, and if it does a corrective move, it will go probably up to the 50% of the prior move. So we also include 50% into the Fibonacci ratios that we use from a trading standpoint. Though 50% is not a definitive ratio or a percentage within the Fibonacci series, but we still use it. That's how we are built, right? We traders and investors are built like that. So before we go further, I want to take a step back and talk a little bit about the principles of Dow theory and the market structure and so on, because it is very pertinent for the subsequent content that we will be talking about. In fact, a lot of investing and a lot of trading has basis on these principles. So if there is anyone who is already well versed with these topics, I request your patience. Maybe you can take a walk and grab a cup of tea or a coffee or a glass of water and come back. By the time I'm helping those who are beginning to learn to get these principles well ingrained in their mind. Because if you can internalize and if you can get this into the grain of your whole exercise of trading and investing, it makes your process that much more pleasant and it makes your learning that much more faster. So Dow, as you may have heard, is Charles Dow. This is one of the early investors slash traders who are the people who started with coming up with theories and concepts which are the whole foundation on which every other aspects of trading is relying on. Charles Dow came up with his Dow theory, and he also started this Dow Jones Industrial Average and Transport Average, which was used by him very effectively in terms of his decision making of trading and investing. And that formed the whole basis on which even currently we have the Nifty 50 and Bank Nifty. Nobody asked, why did you do this, right? But the principles are all coming from the experiences and the knowledge that people like Charles Dow had shared. So he had this theory that at any point in time, there are three trends which are coexisting in the market. And his analogy of that is the waves of the ocean, right? So there is this primary trend, which you can call as a major bull or a bear market, where a stock runs for a period of time and an extended period of time, which is essentially a bull market or a bear market. It can run for a year or even longer. And imagine this to be in the analogy of a sea ocean. Imagine this to be the big tides, right? It comes to the stage, it comes to the shore and it stays for a while the tide remains. So that's how this primary trend will move. And you will be able to see it on the price chart whenever you're looking at it. And once you start to correlate the price chart with these principles, your whole view of how you look at the price chart, your whole view of how you plan your trades and how you time your entries will have a very positive shift in it. So within a primary trend, there will be a secondary trend, which is a correction or a counter trend move. When the price is in a bear bull market, there will be a period of time, weeks, months, sometimes even lesser, where the price moves against the flow of the larger primary trend. So imagine this to be the waves of the ocean, which is going back into the ocean when there is a tide, right? So there is a tide, the waves are going back, but that's not the end of the tide. It's just that the waves are going back and they will keep coming back. So that's the secondary trend. And then there are these minor trends, which are the ripples of the wave which is receding and the waves, the tide which is coming up, right? Those will always be moving in either direction. So these three trends will be there coexisting in any stock which is in the market, right? Now, one of the very important principle that we need to drill into our head is when you are trading, please always make sure to be clear that you're going to align your trading with the primary trend. So if you're going to be a long only trader like me, make sure that you're picking up an instrument which is having a primary trend of an uptrend. That one simple principle, that one simple validation will make your whole trading and investing experience much more profitable. And I did talk in terms of my introduction that I noticed one objective or one characteristics in the stocks which were very profitable for me. That was this one. And it was not a very well known principle that I was consciously applying. It so happened that I was investing in stocks which were in an uptrend. And that gave me the realization. When I started to read about these things, out of curiosity, I went back and checked on those stocks. And incidentally, I was investing in stocks which were already in a primary uptrend. It was a sheer luck. I wouldn't attribute it to anything else. It was a sheer luck, but somehow it actually made a lot more benefit to me over a period of time. And that was one of the factor which kind of like gave me the conviction that good wealth can be made even if you trade for a shorter period of time in a year, but do it when the tide is in your favor. So Dow theory is very theoretical, right? It's very conceptual. Now we need to bring it into the chart. So when we talk about a long-term trend or a primary trend and secondary trend and all that, how are we going to recognize it? So when you look at a price chart, right, we all know, if you have read about anything about trend trading, you will know that you have to look at the price making a structure of a higher high, higher low. And on the hindsight, I think this graph on the right side is not an exact depiction of what I'm trying to convey. But anyway, for now, we will keep this because I have put in few other actual price charts to follow. which will give you that example and clarity in terms of what it is. So if you look at it, there is a dominant trend. And then there is a corrective trend, which is amber, where the price keeps coming down. There is an intermediate trend, which is also going up. Now, one word of caution, after this session, if you go and try to watch YouTube videos or read any content, you will get thoroughly confused because the terminology that is getting used for each of this is very, very different. Different people use different terminologies. I'm little overwhelmed by the number of terminologies that people can invent when talking about the same concept what someone has spoken about it earlier, right? So there is this primary trend and then somebody calls it dominant trend. There is this secondary trend and then somebody calls it intermediary trend. So don't worry too much about the terminology and just try to take the essence out of it, and then we'll correlate into what we are talking about it. So there is a dominant trend, which is what we are interested, where the dominant trend is on the bull side because we are long only cash traders, right? So the dominant trend is an uptrend, which means there is a clear trend of the price moving from lower to the higher level. Within this dominant trend, there is a secondary trend, which is called an intermediary trend, where the price makes a corrective move within the dominant trend. So it makes a high and then it makes a low and then it will come lower. So that's how the price moves. And then there is this minor trend where the price fluctuates. Now, from a investing and trading standpoint, we have this nomenclature of when the price makes a dominant move, right? It is a dominant move. We plot it and it's done, dusted. And then every move the price makes is in the direction of the dominant move and a counter trend, right? So and both are intermediary moves. So stay with me. It might be a little confusing, but stay with me and I will try my best to explain it. So intermediary move, right? If you can see my cursor, right? This is an intermediary move, right? But this is not a counter trend move. This is the move in the direction of the trend, right? And then there is this corrective move. This is counter trend move. This is also an intermediary move, right? It's all happening within the direction of the dominant trend. So we generally look to trade in the intermediate trend of a upside move, which is in line with the dominant move, and we call it as an impulse move. An impulse move is an intermediate move or a secondary trend in the direction of the dominant trend, right? That is impulsive move. A corrective move is an intermediate trend or a secondary move which is going against the direction of the dominant trend. Sorry, where is my cursor? Okay, this is an intermediate move, but it's going against the direction of the dominant trend, right? So we just need to bear in mind, we will use this term impulse move where I'm referring to this particular leg of the intermediate move. It's called impulse move. And then we have this corrective move, which is the secondary trend, intermediary trend, but those are counter trend moves. So just bear in mind when you are looking to trade a swing, right? Just kind of like make a check.
Bhaskar, sorry to interrupt you. Is it possible for you to annotate on the screen? There's a message on the chat box.
Okay.
If you can write down or annotate what is the impulsive move,
Okay.
on the screen.
So this is an impulsive move. Okay. And how do I change the color? Okay. Sorry, I'll erase it and then I will do it. Clear all drawings. Okay. So okay. So this amber lines are all intermediary moves, right? You guys are with me, right? The amber lines are all intermediate moves. And Puneet, thank you so much. I'm not looking at the chat. So if there are any comments that somebody is writing on the chat, please do let me know. Okay. The amber lines are all intermediate trends, secondary trends, right? And here I have said like these are the corrective retracement. But bear in mind that this is an impulsive move because this is an intermediate trend which is in the direction of the dominant trend. We call it as an impulsive move. This is also an impulsive move because this is an intermediate trend which is happening in the direction of the dominant trend. And then you have this intermediate move, which are counter trend moves. These are intermediate trends, but they are going against the counter trend. Here is again an intermediate move, which is going counter trend, and that is also a intermediate move, but it is a counter trend move. So that is a corrective move. The point is, what we are trying to do is when the price is having multiple intermediate moves, up and down moves, we are looking to spot this zone, right, where the intermediate move, intermediate trend or counter trend move, corrective move. I'll try to keep up with the word corrective and impulse move, where the corrective move ends and then a fresh impulse move begins. This is all that we are trying to find out, because once you catch this, you can write this whole move of the impulse move, right? And because you're riding on the impulsive move, which is in the direction of the dominant trend, your probability of success is much higher. Because in general, this impulse move will be followed by a corrective move, but the corrective move will not take away the whole distance that is traversed by this impulse move. It will do only a fraction of it. So we wait for this corrective move to end and then we enter so that we are able to ride the next impulse move. And this is exactly what is swing trading all about, right? People talk about swing trading, but this is essentially what they are looking to do, right? So I hope this is clear. We'll move on to the next slide where we have shown some charts that will
Bhaskar ji,
probably...
there is one more question here in the
Yeah.
chat messages. Rajshri has asked that if we can correlate these trends with the 20, 50 and 200 days moving average.
Absolutely. We will do it as we go along. Yeah.
Sure. Thank you.
So a kind request, if the question is related to the chart and you are asking something related to it, feel free to interrupt me. There is no harm. Please feel free to do that.
Yeah, Bhaskar ji, Rajaram here.
Yes,
Very
Rajaram.
good morning. So I have
Very good
a
morning, sir.
query
Yeah.
on two markings that you have made in the chart. The
Mhm.
second HL you have put, that should be HH, right? Higher high
Ah,
at the
okay. Yeah,
peak.
you're right. You're right. You're
And
right.
the
You're right.
last one you have marked as LH, that should be
LL.
lower low, LL.
No, it is actually higher low compared to this. It's higher low. That's fine. Thanks for pointing it out. I'll correct it in the
The
final version.
last one you have written as LH.
That is a higher low, right? It is still higher than this low.
It should be HL, Rajaramji.
HL.
Okay.
Yeah, you're right. You're right. Thanks for pointing it out. I didn't
Right.
realize it. It was a copy paste issue. So
Sure,
I'll
sure.
correct it before I share the final chat. Thanks for pointing it out,
Thank you.
Rajaram. Yeah.
Thank you.
So moving on. So here is a weekly chart of Nifty, right? And this is not a great work, but it was done in a little bit of a hurry. So please bear with me for the amateurish work. So I've just shown, right? Here is a low, and this is a dominant trend of Nifty 50, right? From COVID period. So if you look at it, the dominant trend is up, right? And then these are the corrective moves, right? So this is the whole dominant trend. These are the corrective moves that Nifty has given over a period of time, right? And then I've also shown these smaller minor trends within this corrective trends where the price jumps up and down, right? So if one were to try to catch these trends, right, you're more likely to get beaten up because you are still in the corrective trend and you're not going to be able to survive there. So you will get beaten up over there. And this is one of the reasons why traders often fail, because you are not riding with the trend, right? It's better always to wait for the corrective trend to end before you start to build your positions. So that's how it is. And just for anyone who is interested in the moving average, the darker color moving average, the maroon, dark maroon is the 10 simple moving average on the weekly, and the black is the 40 weekly moving average, simple moving average. So I use this for the weekly charts. So it's just a simple depiction, not the perfect picture. I'm sure if you spot it, you will find a lot more instances of where the corrective moves can be plotted. But this is just to give a high level view of how to study the trend, right? Now, this is definitely an amateurish picture. And here comes the professional's job. Thanks, Puneet, for putting up this wonderful chart, right? So this clearly tells you the difference between a professional and an amateur, right? So this is a daily trend, right? Just for the purpose of this chart, you consider this as a dominant trend, right? Here is a dominant trend, and in this, the primary trend is up. The dominant trend or the primary trend is up. And then you have this corrective trend, which is the intermediary trend, which is corrections within the dominant trend. And if you can look at that higher high, higher low, it's very clearly visible. There is no confusions in that, right? That's how it comes. Now, what is more interesting is that this corrective intermediary move is zoomed in terms of a lower time frame chart. Here, if you look at it, it's giving a clear higher, lower high, lower low, right? Not higher high, higher low. I'm sorry. It's lower high, lower low. Price goes up and then it comes back and then it gives a bounce and it comes here. Now, what is the purpose of showing these two charts, right? This is a daily, this is a 75-minute or intraday chart. The intent is not to say that you should always go down the time frame and look for a trade. The intent is no matter which time frame you are in, try to recognize whether this is you're trading in the impulse move or you're trading in the corrective move, right? Now, if I were to look at there square, okay, I will just take this, okay. If I were to look at this zone, right, price comes low, it does a shakeout, and then it starts to move higher. It breaks this range, right? It breaks that range, and then it goes higher, right? Strictly speaking, if I'm looking at this one small part of the price chart, I should be looking to go long somewhere over here. Are you guys with me? The price falls, it ends, the fall ends here with a shakeout. It starts to resume higher, and then it makes trying to make a new high here. I should be going long here, right? Now, what will happen if I go long here? I am trading against the corrective. This is a corrective move, right? This is not the impulse move. This is a corrective move. The corrective move is downward. I am trying to go long here. So this is a premature entry. And this sort of premature entry is what gets us knocked off in terms of our trading, right? This is more relevant to swing trading. So, keep that frame of mind in terms of the discussion, right? This is more of swing trading. So, many a time when you find a chart which is looking very appealing because the stock has already made a low and then it's coming up and it's putting up a higher high, higher low. So your mind kind of like tells you that, no, okay, this is in an uptrend, I should trade. Now, just take a pause, zoom out and see, is this a corrective move or is this an impulse move? Now, here in this case, it is a corrective move and I'm trying to go long here until and unless I have a signal that the corrective move has ended. Me trying to take a trade here is a premature entry, right? Is this clear? Is this part clear?
Yes.
Me trying to take an entry over here, I'm making a wrong decision, right? So I'm more likely to get stopped out and then I can go on cribbing like, no, these operators are playing, these guys are coming and hitting my stop losses, they know exactly where my stop losses are and the market is rigged, etc., etc. And I have nobody else to blame other than myself because I did not time my entry appropriately. So many a time when you see experienced traders, if you read Jesse Livermore's book, he will keep saying that no, you have to be patient, you have to wait for the stock. You should not be in a hurry to enter. This is what they're talking about, right? You wait for the corrective move to end and then to start. Now, that again brings the next question, how on earth for me to know when the corrective move has ended? Obviously, nobody will know. There are ways and methods by which we can predict or anticipate with a higher probability, and that gives us an edge, and that is all we are looking to have, right? So if there are no questions, I'll move on to the next slide. So here is a small, Here is a small exercise that I want you people to look at, right? Why clear all drawings? Okay. So I have taken one Markson's Pharma chart, right? And I I'm a very lazy person, so I've just plotted A here in blue color as a primary trend and C as the peak of the primary trend, and saying this is a primary trend, and I'm only interested in this part of the primary trend, and try to plot the corrective moves in this, right? I've just tried to plot the corrective moves in it. Now you can put it like this, or you can put in any other way, right? Whichever way you want to recognize that this is a primary trend, this is a corrective trend, you can use your own principles of how best you are able to recognize it and all that. So this is something that you guys can do it for fun. There is no compulsion, there is no pressure on you to do it. But if you wish to do it, pick up any chart, take out all the moving averages, take out all the indicators and everything else, and just see a plain price chart and start plotting the primary trend and the intermediate trend. And don't worry about the minor trend, ignore it, because it's just the noise. We are not going to be interested in the minor trend, but try to identify the intermediate trend, which are both corrective and impulsive moves, right? This is a corrective move, this is a corrective move, this is a corrective move. But within that corrective move, look at the impulse move, right? So you will be able to find this pattern, how the price moves in the impulse move and how the price corrects, right? So start plotting it, and then you can share it in the group and tag me, and I will kind of like take a look at it and share some views. But you don't even have to do that, right? If this is just an exercise for you to do to better train your eyes in terms of being able to spot these corrective moves and the impulse moves. Because trust me, that's an effort which you can train to do and get your eyes to be able to spot it as you see it. Your probability of success will dramatically improve, right? So no pressures. If you want to do it, do it. If you want to do it in as many charts, you can do it in as many charts. If you want to share it in the group, please do share it. Otherwise, it's okay. You can just keep it in your own journal, right? Like, no, do it and keep it for your reference. And you can actually pick up stocks. And actually, I would more strongly, I would recommend this exercise, that pick up trades that you have done in the past, right? In the last 1.5 months, and look at stocks which has given you a good profit, and look at stocks which has not given you the good profit. And then do this plotting, and then try to see where did you time your entry and where did you time your exit. And that can give you a lot of insights in terms of probably what you could have done differently, which would have improved your odds. And this is essentially the edge, right? This is what is the edge. Now, then you overlay this with other factors like Fibonacci, moving averages, and if you are a fan of any indicator that you use, you add those tools as well on top of it, and it just keeps compounding your edge. And then you will identify the sweet spot of entering your trade that gives you the best odds of success, right? So with that, we will move on. Why is it not moving to the next slide? Okay. So now coming to the actual Fibonacci, if you have to place...
One question.
Sorry, I can't hear you. If you can be a little louder, please.
Baskerji, I have one question.
Yes, please.
Yeah. Baskerji, it's easy to identify this kind of B2D section here, intermediate trend in the past chart, right? But in the live chart, how do we identify that the trend is still same, or how can we decide that when we should enter? Because we don't know, right, where it will stop. D section.
Absolutely.
The D. Yeah. So can
Absolutely.
you take one example where you can define how to handle this in the live chart?
Oh, sure. We will do it as we go along.
Where it will make the...
We will do it as we go along, right? And the idea of asking people to do it in the past, on the hindsight, is one, it is easy to do it. And secondly, if you plot it on the charts that you have traded, it helps you identify where did you go long, and where did you cut your trade or your stop loss got hit. And then you look at it in this perspective, that learning will get imbibed in your mind. And then in the future, when you're looking at a chart, you're going to take a step back and assess this. So your question is very valid. In a live scenario, how do I find out, right? Take, for example, here. Okay. This is a this is actually a downtrend, right? The primary trend seems to be down, right? And then I have, this is the corrective move now, right? This is the corrective move. You are with me on that?
Yes, yes, I am.
Here, the corrective move is not at over. Okay, you don't know, right? Whether it is going to end here or whether it's going to end here or whether it's going to end here, you don't know. It can bounce, it can come down anywhere from here. It can come down from here, it can come down from here, or it can come down somewhere from here, right? If this line goes there, right? You never know. But all we know is that at this point in time, the primary trend is a downtrend. It's not an uptrend, right? Because it has clearly changed the direction of the primary trend, right? And this is a weekly chart, by the way. So there is no doubt that, this is the this is not the corrective move, but this is the impulsive move. It's coming over here. Now, once it starts to form, it's no longer in an uptrend, it's in a downtrend. So how can we recognize, sorry, I'm not used to these things, so it's becoming a little tricky. So how do I recognize this zone and plot when it is the end of the corrective move and when it's the start of the next impulsive move is where we are going to look at concepts of Fibonacci and moving averages to help us out, right? You will still not be 100% perfect, but at least you will be able to make a judgment at a level where if you are wrong, you are going to know it at a fairly quick period of time. And at a very small stop loss, you will know that you are wrong, right? And if you happen to be right, the odds of you making money is much higher. Yeah. So as we go along, if there are other charts where we want to look at it, I can definitely pause and I can definitely show that.
Bhaskar, one more question.
Yes, please.
Sometimes we have seen that this is a perfect example actually where you are showing that D is continuously high and low. Okay. But in most of the chart we have seen sometimes basically we make the lower low, then higher low, sometimes again lower low.
Okay.
So basically that I understand a sideways trend. But here, if you see when you draw the first line, red line, here it makes the first lower low from the deep section. If you see the first lower low, here basically this is the first alarming sign here that this is the first time this chart makes the lower low, right? So here I think I want to discuss more about the NTO exit. So first I would like you to continue with your theory part, then I think we can ask the further questions.
Absolutely. That will be a very lovely way of doing it. Thanks for that. So, okay, have I closed the annotation? Okay.
Sir, one more question.
Yes, sir.
Hello.
Yes, please go on.
Yeah. So you are showing the chart on a weekly trend. So always we need to check with the weekly trend,
No,
or we can do it on daily trend also.
You can do it on day chart. You can do it on 75 minutes. Price is fractal. All these concepts apply across all time frames. It's because if you are learning these concepts, you first practice it on the weekly, then you come to the daily, then you come to the lower time frame. Because as he was rightly pointing out, right, your dominant trend and your intermediate trend, the time frame of those trends will shrink as you go lower in terms of the time frame. So if you're going to do it in the intraday charts, right, in a 5-minute chart, 3-minute chart, the fluctuations will be too wild. Even before you realize that, okay, the primary trend has already set, it will already be in the downtrend. So it's very difficult in the lower time frame. But to answer to your question, it works across all time frames. We have chosen this particular chart just to convey the message that when you are looking at a price chart, always start with identifying what is the dominant trend and then try to plot the intermediate trend. And you don't even have to do it from the bottom, right? Like, no, if you are looking at a particular level of the price chart, right? Just figure out, okay, am I in the corrective trend? Is it a corrective move or is it an impulse move? Just ask that one question and then you accordingly plan your trade, right? That's all we are suggesting.
Okay. And sir, so you have done a lot on this charts and the study. So what you suggest with the experience, because you initially told you go with the long only cash. So what's your suggestion to the beginner, whether we should begin with a weekly trend or we can go for daily trend also?
So two things. Are you an investor or are you a trader? right? If you are a
I'm
swing
a trader.
trader, if you're looking to be a swing trader, ensure even if you're looking at a daily chart, ensure that on the weekly the dominant trend is uptrend. Then you come to the weekly chart. Come to the daily chart. In the daily chart, you make sure that you are not going to be entering when on the weekly chart the price is doing a corrective move, right? So you just have to, that is essentially, this is all the multi-time frame analysis. It's nothing, I'm not talking any new mumbo jumbo that I got out of it in some cave that I was meditating last week, right? Nothing of that sort. This is all the multi-time frame analysis. So if you are a swing trader, you want to go long on the daily time frame, you just make sure that if you look at the weekly chart and you're plotting these B and Ds, that there is a D visible here before you go to the daily chart and start to look for the entry around that level. That will improve your odds of success dramatically. And trust me,
Thank you.
as he was rightly pointing it out, this is a hindsight chart. It's easy to do it. In a real chart, if you are able to spot it, you already have achieved a state of expertise that others can be very envy of. But the intent is that start with this focus, right? You start training your mind to be able to spot these corrective moves. Once you are able to do this, your multi-time frame chart analysis will ease out and it will become very, very smooth for you to learn and do things in a better way. So Fibonacci retracement, because we are always interested in riding the impulse move, right? And then identifying the end of the corrective move, right? We are looking to plot Fibonacci retracement here. So when you are looking to plot Fibonacci retracement, you always start at the beginning of the impulse move, right? And I'm not talking about the dominant trend, I'm talking about the impulse move. You start from the beginning of the impulse move over here, which is the low point, the swing low, and then you plot it at the end of the particular impulse move, right? Now, these are minor moves, corrective moves. It can be minor moves. You plot it through that, and then you wait for the stock to retrace. It will come back, it will retrace to a certain level of the Fibonacci ratios that we have talked about. Depending on the level it comes, and whenever it shows a sign of reversal from there, we can take a trade, right? So how do we know which level it's going to come? How do we know whether it is ready to reverse or not? We will talk about it as we go further. But if you are plotting Fibonacci retracement of an impulse move, you always start with the swing low of the impulse move and go up to the swing high of that complete impulse move. So we are not going to look into entering anywhere while the impulse move is still on. We are going to wait for the impulse move to end and then the corrective move to happen, and then you plot your Fibonacci retracement for that complete impulse move to see how deep the correction is going to be, right? So here is one quick quiz. Here is a price chart, right, where it's an IPO base. The stock got listed, it had a base and it broke above the resistance level. And then it started to move higher, right? Now, relay it to the Markson's chart where the corrective moves and impulse moves were screaming loud, right? Saying, here I am the corrective move, here I am the impulse move. But in this chart, it's a little tricky, right? This is how it is, right? You read a book, you listen to a YouTube video where everything is presented to you in a very simple, easy to understand manner, but then you try to apply it on the real life, it completely knocks you off, right? This is exactly one such experience. So the price starts to move higher above the resistance and then it keeps moving higher. And for people who are interested in the moving averages, the darker maroon the lighter maroon or the maroon color is 8 EMA. The blue is 21 EMA and the brown is 50 SMA, right? So don't get hung up with the moving averages. You can choose whatever the moving averages you want to use and you use that as your point of reference because that is what you're using and it will work perfectly fine. It's not like the moving averages that is shown here are the only ones that you should use. You feel comfortable to use whatever, you use that, whatever that you are comfortable with. So it started to move higher, right? Now you want to see where to take an entry. Here the pullbacks are all very, very shallow, right? So what do? How do you enter this stock? And where would you put your logical stop loss, which means there has to be a logical structure where you would put it in and how would you trade it. Now, it's very difficult because this is a stock which has not given any consolidation and it is just kind of like going up continuously, right? So the way how we do it is by plotting the Fibonacci retracement. And as I said, in an impulse move, you plot it from the start of the impulse until the end of the impulse, right? So this is the dominant trend for this stock. So I plot it from this swing low and to that swing high, and then I plot the Fibonacci. Now, Fibonacci gives me this, and so just bear in mind, these are ratios, 23.6, 0.236, 0.382, 0.5. But from a reference standpoint, we always talk about it as a percentage, right? So you just simply multiply this by 100 and that gives you the percentage. That's basic mathematics. So it gives you 23.6 is this level, 38.2 is this level, 50% is this level, 61.8 is this level. So now it at least gives you a visual reference point, right, at which you can get interested to see, okay, what the price is doing here. Whether the price is going to come up to here or whether the price comes up to here or here, what is it going to do? So you will get that idea, right? So this is how we plot it. So for a downtrend, for an uptrend, we plot it from the swing low of that impulse move to the swing high of the impulse move. Now, I don't know if already there is a question posted on the chat, but if I were you, I will ask a question. Why did you select this swing low and why not this swing low, right? So for a beginner to identify the retracement of an impulse move, right, I would suggest you switch to the weekly, look at exactly where you can spot the reversal or the starting of the impulse move and then use that low to plot the Fibonacci. And once you gain experience, you can shift it on the daily basis. But to begin with, pick a swing low on the daily, which is also making sense as a swing low on the weekly basis. This is like related to this with if you are learning to ride a bicycle for the first time, you have those support wheels on either side of you, right? Just to help you make sure that you don't fall. So this is just like that. So switch to the weekly and plot the Fibonacci retracement on the weekly chart for that particular impulse move, identifying the swing low to the swing high, because that should be relatively easier. And then come to the daily and see where it fits in. And if you find a better spot, which is even higher, suit yourself, do it. But I would still suggest as a beginner, you always stick with the swing low, which makes perfect sense in terms of the impulse moves beginning. And go till the end of the impulse move as you are at that point in time, so that these levels make better relevance, right? Because obviously you're plotting it at a higher time frame, so it carries a better weightage. So that's how we plot the Fibonacci, right? Now, okay, I have plotted this chart. It has shown these levels. Now what I'm going to do with it? How am I to interpret these numbers? What does these numbers even mean, right? What am I supposed to interpret if the price comes up to 23.6 or 38.2 or 0.5? How is it beneficial to me, right? There is no clear message in this chart. So imagine this green line is the impulse move, right? This is an impulse move and this is a corrective move, right? What we are interested in knowing how deep is this corrective move of this whole impulse move, so that I can plan a trade for the next impulse move. I'm not interested in entering into the counter trend move if there is a minor trend of upswing over here. I'm only interested in the next impulse move that the stock is going to give. So and imagine that this line was plotted before this impulse move came, right? It is shown because generally if you have spotted it and entered right, this impulse move we should go above the previous high. This is high. This is higher high. So it should make another higher high. It should not come below. But if for this impulse move, for this green line impulse move, you have plotted the Fibonacci, you started from this low, which is 100%, and this is the end of the impulse move. So it is 0%. What is the percentage of the retracement of this impulse move the stock has given as a corrective move, right? In this case, it has come up to 50%, which is a psychological midpoint and a safe zone for the price to retrace, right? However, the price could have bounced. Okay, let me annotate. However, the price from here could have come to this 38.2 and then it could have gone over here, right? However, the price could have come from here to 23.6 and it could have gone higher, right? It need not always come to 50%, right? It could have bounced on either of those levels. So what it tells us when the price comes up to the 50% is that the price is retraced 50% of the prior impulse move and then now it is going to go higher, right? And that's a psychological midpoint of the previous impulse move. Assuming, say, a stock did not come up to the 50%, it bounces off 38.2% level itself. That's a major support. So the stock is having a strength that the corrective move is not even going up to the 50%. It's bouncing off even prior to that. So the momentum in this impulse move is good enough that the stock is not even having the patience to go up to the 50% level. It's bouncing off at 38.2% level itself. Imagine another case where the momentum of the impulse move is even higher, that the stock is not even having the patience to come up to 38.2. It comes to 23.6 and then it's bouncing off from there itself. What each of these scenarios indicate? That the strength in the momentum of the prior impulse move is still so strong that the price can move higher even at a lesser level of a corrective move, right? So these are the trades that we want to take, right? We want to take in a case where the price has done a very minor correction, shallow pullback, and then it's moving higher. So you classify based on the Fibonacci level to which the price has corrected. You classify the move as whether it is a shallow pullback or whether it is a healthy pullback or a major support, or whether it has come all the way to the psychological midpoint, right? And then you can figure it out, is this a trade I want to be in, right? And for theoretical purpose, 61.8 is a golden ratio. So for all what you know, price can come even up to here. And then it can bounce from here. That's also perfectly acceptable Fibonacci moves, right? It can do it. Now, interestingly, here they have called 78.6 as a deep retracement. And this is something that this is a chart I picked up from the internet. And this is essentially done by an intraday trader, where they go into 1 minute chart and 3 minute chart and all that. And as I was saying, in an intraday trade, intraday charts, the volatility is too high. So in that case, a corrective move can come even up to 78.6% level also of the impulse move. But as a long only cash trader, I don't even want to trade anywhere below 61.8 because to me that's a reversal. I'm not going to look to swing trade a stock which does not have momentum enough to bounce before it comes to 78.6% level. Now, are we good? Can we move on to the next slide?
Yes.
Okay, thank you. Okay.
Masterji, I have a question.
Yes, sir.
See, sometimes pullback may not be 23.6 or 38.2. It may be 18% or 15% or say
Beautiful.
25% or something like that.
Yeah.
In such cases, how to interpret that?
Yes, we'll come to that as we go along. Yeah. So to answer your question in short, right, that just shows to you that the trend is very strong, right? The impulse move has got so much of strength that the price is not even getting an opportunity to correct until it comes to 23.6. Price says like, no, enough of hell with your corrections, boss. I'm having so much of momentum. I'm not even going to wait for you to done your corrections. I'm already done corrected. I'm going higher. So it will straight away start to move higher, right? So how do we identify those changes and how do we trade those things? We will come as we go along. But that's a wonderful question and very valid. And trust me, price has no obligation to bounce exactly at these levels. These are not a line drawn on the sand, right? This is not like 35 means you're pass and 100 means you're 100. These are levels which have to be taken into consideration as a zone. These are not levels. So how do we add significance to these levels is by way of adding other edges as a factor of confluence, and then we do it. So we will talk about it as we go along.
Thank you.
But thanks for that question. That's quite valid question. So here comes the theoretical picture, right? My textual explanation to the previous chart. So while we consider 23.6 as a shallow pullback, what is the interpretation? The interpretation is that you will often see this 23.6 level holding good in a stock which is having a very, very strong momentum in a fast moving markets, and price barely corrects before continuing in the direction of the primary trend. So this is best suited for traders who are looking to ride a strong momentum. Now, many a time you will see that a stock which is coming off, my bad. Many a time you will see that a stock which is coming off a very strong base, it will put up a massive 20% upside move, no consecutive days of upper circuits and all that, and then it will start to do a pullback. Now, how would you judge whether to trade those stocks or not, right? Simple. You plot a Fibonacci retracement from the low to the high and see what is behavior around these moving averages and around these Fibonacci levels. That will tell you whether this is a momentum that you should play or not, because there are times when these strong upside move will fizzle out in no time and it will come back almost up to 61.8 of the prior upswing move. So we can straight away knock off those moves and say, "Arey, this is a waste of time. I'm not going to trade this. This is one of trap that somebody has done it. This is not a corrective move which has got a weakest. This is not the impulsive move where the corrective move is weak, right?" So generally you look for confluence of key moving averages. I have shown like 8 EMA, 10 EMA, 10 SMA. You choose whatever you want to use. If someone is using a 9 EMA or a 9 SMA, absolutely fine. It's all your focus that you want to have, right? But look for a confluence of these zones, 23.6, with any of these moving averages, and that gives you a better conviction in terms of looking at it. And typically for a swing trader, this is very ideal where there is a fresh momentum, there is a catalyst, the stock is coming off a very long-term base, and then the momentum is really strong. So you can ride a quick momentum ride, enter the stock when it's showing signs of end of the pullback move and commencing of the next impulse move, you enter there and you ride that momentum and you enjoy the ride as long as it persists. And then after a couple of 23.6 level pullback, the stock will start making a 38.2 level pullback, which is a major support. And this will normally have a confluence of 20 EMA, 21 EMA, 20 SMA, depending on whatever you choose. So you could trail it partly with this, partly with that. It's all about how you want to manage your trade. It's about your trade management, so you can handle it. Now, very rarely, and in stocks where the momentum is not very strong, right, it can come up to 50% level of the psychological midpoint. And this is generally respected. The first pullback to the 50% Fibonacci level, this will also coincide more or less with that 50 DMA. Sometimes this may also happen below the 50 DMA, but still if it is holding the 50% Fibonacci of the previous impulse move, you could still give that rope to the stock, right? But definitely this is not suitable for a momentum play. If you have a fundamental insight onto the stock, you have done some analysis, there is a clear long-term catalyst available in the stock, you want to trade it positionally for the next few months, you could very well look to enter around 50% level. Now, if 50% is okay for you to trade, so be 61.8. That also you can do it. More so because it is a golden ratio, and operators know that at 50% traders are looking to go long, so they will generally push the price below the 50% take it somewhere close to 61.8 and then bring it up, right? So you can keep this zone as your focus area and take the trades which are meant for positional traders. So just as a summary of the slide, 23.6 is more suitable for momentum short-term traders for a few days to a week or two. 38.2 is more suitable for a mid-term swing traders and people who are looking to hold a trade for a couple of weeks or a month. And 50% and 61.8 is more suitable for a positional trader. Now, any move beyond 61.8 as a cash trader where my primary trading window is daily, I don't even look at it. I consider as good as a reversal. And I'm not interested in that stock. I will simply remove it from my watch list and I'll go and look at other stocks. Or at least I won't have it in my focus list because it's a waste of time. I would rather pay attention to stocks which are showing good momentum. And if there are no good stocks which are showing momentum, I look for stocks which are showing healthy momentum and trade with 20 EMA or 21 EMA, right? So how do you use this Fibonacci levels? I have said so if you look at it, right, I showed a plain chart, right? I showed a plain chart. I showed you how to plot Fibonacci. And then I showed you a chart without Fibonacci and said that, how do you logically break this chart into the logical structure so that you know where the support and the resistance can be. And then we put up the support and the resistance using Fibonacci retracements. And then we gave an interpretation to those levels in terms of what does it mean when a stock respects a certain level. So 23.6 is a shallow pullback, 38.2 is a healthy pullback, and 50% is a psychological. And then how do you plan your trades? What is the kind of if you are a kind of a trader, what is the level that you should be paying attention to the stock doing it, right? So depending on the nature of your trades that you want to do it, or at least wire your mind that this is a trade which I need to be more patient about. I need to trade for a longer duration because it is pulling back right up to 38.2 level, right? So I can't treat this as a momentum trade. I need to treat it as a little more a longer duration swing trades or a mid-term swing trades and all that. So you are giving that structure, right? Now, how do I apply it from a trading standpoint? How do I use this Fibonacci tool to help me plan my trade better? The first and the foremost is, as I explained, it helps you to confirm the trend strength. If there is a stock which is showing a good trend strength, and if I say that, you know what, this stock has a very good trend strength, you can always ask me, how are you seeing it? What is your measure of trend strength, right? How do you measure the trend strength? And I'm using the Fibonacci levels that it respects to say that the higher the Fibonacci retracement, the shallow the corrective move is, higher the trend strength, right? That's one way of looking at it. Second way is by plotting the Fibonacci retracements, I'm able to identify structural support levels and resistance levels around which I can plan my entries, right? If a stock is in an impulse move, I'm not going to wait. I'm going to wait for it to complete that impulse move, and the stock has already started a corrective move. I'm not going to be in a hurry to jump in and trade as soon as it shows me signs of reversal. I'm going to wait for a confluence. I'm going to wait for it to be done with the corrective move and show me that it is starting the next leg of the impulse move. And then I plan my trades better. And because there is a clear levels that I have on the chart, I can always trail my charts as the trade progresses higher and higher and wait for the moving averages to catch up, right? It's not necessary that the moving averages will catch up in the pace with which the stock is moving. So I can always do this retracement and say that, okay, this is a swing trade for me. So my trailing stop loss will have to be below the 38.2 level. And then I plan my trade accordingly. And to that extent, I'm ready to look at how patiently I can wait for it. So now I'm not in anxiety that, oh God, I'm holding a stock which is already falling or not. Because now I know that where is the healthy pullback expected to last, up to which level. And whether it is coming up to 23.6 level or whether it is coming to the 38.2 level, I now have a clear structure in front of my eyes for me to plan that trade well. And this is also used to help in identifying levels for selling a partial positions. And there is too much of text over there. Ignore it for now. We will talk about it in detail as we go along in the chart. And just a disclaimer, when I started to read stuff, I did talk about it as part of my introduction also, but when I started to read about stuff, I was essentially looking at two things. One, what will help me get as a better trader? And two, what are the pain points that I have, which if I can learn something that will help me address that pain point, I can get better trader. So I was looking at both in terms of progression as well as filling my gaps, the vulnerabilities that I'm building on as I progress, right? So with Fibonacci, I have learned only a very select set of tools. There are other tools which are available that you can learn, that you can explore. My whole purpose why I want to use Fibonacci was met with me learning Fibonacci retracements and Fibonacci extensions. So I never had the necessity to learn the other things, right? So like the Fibonacci channels and resistance fans, etc., etc. I have not learned it. So if any of you are interested, you can learn it, but I have not. So I'm giving that disclaimer right over here. So the first point, right, to confirm the trend strength, here are two charts, right? And just to make it easy for you, the chart on the left, I've drawn the arrow mark where the impulse move starts and ends, right? And imagine this part of the trade has not even happened, right? So here I'm not even considering this part of the trade. I'm only considering from this impulse move to that impulse move. Look at it, the stock makes a bounce and this light blue color is 200 EMA, right? The stock comes up to the 200 EMA. It makes the impulse move begins from here. So I am plotting, and in this case, the impulse move starts with 200 EMA. There is no necessity for the price to always have the impulse move starting from 200 EMA. Just bear in mind that, right? Here, the 50 DMA is even below the 200 DMA, right? 50 DMA is here, the 200 DMA is above. So be mindful of all these factors, but there is a confluence. The impulse move begins with the price bouncing of the 200 DMA. I am plotted it. Now the price has done a very, very shallow pullback. It comes over here up to the 23.6. It opens with a gap up, but then it reclaims not just only 23.6, but also ATMA. So the very next day, even when the price is still within the upper week of this bar, I can take an entry with a stop loss just below this bar. Because I have two confluences, I have two edges over here. One is the 23.6, which has been reclaimed. And secondly, the ATMA is also supporting the price. And from the impulse move start, the price has been respecting the ATMA. Right? So the chances of this failing, while it can still fail, the odds are much higher for the price to move higher. So what will Jesse Livermore's language, right? The line of least resistance is upside. It's not on the downside. The price can go higher from here and I plan my entry over here. Now, once the price starts to move higher and it comes to the ATMA, I can trail now higher and I can ride the trend as the stock moves higher. Now, in contrast, look at this trade, right? This is a trade where the impulse move is from here and this is the peak of that impulse move. So I have plotted it like this, and this is a very short duration price chart. I've just shown it for you to understand how to study the trend strength, right? So don't hold me to say that no, is the impulse move so short the duration? I'm just using it as a reference point. So here, the price itself is trading up to the 50 DMA and it's bouncing off. It's generally trading around 38.2 SMA. Right? In this case, the ATMA is coming, the price is still surfing the ATMA. However, the ATMA itself is around 38.2 level, right? And the price violates the ATMA, it comes to the 21, it bounces off the ATMA. But in general, right, this can be considered as an undercut of the ATMA, right? Truly speaking, this is an undercut of ATMA. Both the case, the price is browsing around ATMA. Imagine without the Fibonacci, if I'm going to look to trade, will I trade this stock? Sorry. Will I trade? Sorry, guys. I don't know why this is jumping. Will I trade this stock or will I trade this stock, right? Because in both the case, it's riding the ATMA. Imagine without the Fibonacci, I will not be able to take this decision. What is the trend strength? But here I have an additional factor that I can use as my edge, which is In this case, the Fibonacci 23.6 is respected, whereas in this case, it is bouncing around 38.2 level. So if I have to take a trade between these two, I would rather take the trade in this one and not in this one. This is not a bad trade, but this has a higher potential to make money faster. That is all I mean, right? So this has a stronger momentum. It respects a higher level of Fibonacci. There is a confluence. It reclaims 80 MA and it's still respecting 80 MA. I might as well trade this stock. And this will give me a better rate of return, right, than this one, which it is still yet to make a new high, whereas this guy is already in the supposedly the blue sky zone or the virgin territory, whatever you may want to call it, right? So that's about how do you confirm the trend strength. And the second point, spot support and resistance, here it is. Again, you may argue saying, oh, you know what, this is a hindsight analysis. And yes, of course, it's a hindsight analysis. But here is an impulse move, right? The impulse move is done. The price is not making a new high. I plot my Fibonacci retracement. And then I ignore the price, what it did until now, but I'm going to be interested in what the price is doing beyond this level. The price comes back and at every Fibonacci level, it behaves in a particular fashion. So the Fibonacci level which is below is giving some support and the Fibonacci level which is above is acting as a resistance. So I just have to observe the support level to say that, okay, now it has broken 23.6. Where is the next support level that it can respect, which is 38.2 level? Do I have the appetite to wait for the stock to bounce from 38.2? Yes, I can possibly put the stop loss lower here, maybe lower this swing low, keep it over here and wait and watch if it is going to respect or not. But if I think, no, I don't have so much of patience, I don't have a profit cushion, I might as well exit this stock there itself. I don't have to wait for it to come and take my stop loss, right? So this helps you plan your trades as the trade is evolving. You don't even need to predict what the stock is going to do. It held around 23.8, 23.6. So, okay, I'm going to draw a support line over here and see if it's going to wait here. It comes and breaks that level. Okay, now I'm out of this trade. I'm not going to be in this trade anymore, right? And the added confluence is that here it made a high, it made a lower high, not too great a lower high because the next level is lower. But then it came back, but it could not break above this high. So I might as well not give the stock any further room for it to come back. So you are able to structurally study the price chart and you are able to take a call in an informed manner and you're not going to second guess. What if I exit over here and the stock goes higher? You're not going to second guess it. It violates 23.6. That is what is the room I'm willing to give. I've given it that room. Now I'm out of this trade. So here is the chart, which will be very interesting for you to look at. From 96, it went all the way up to 156, a close to or even more than a 50% rally. Throughout the rally, it held above the 80 MA, right? And it never gave a very clear, I mean, at least while it was evolving, it never gave a clear range for you to enter. Where would you plan your entry if it was anywhere over here, right? Like entering anywhere over here, you are exposing yourself to a big risk because your only support will be just below the 80 MA, right? Now, it might work, it might not work, you never know. And you are taking a very big risk because you don't have enough edge for you to trade this stock. And if you are going to be structurally putting in your stop loss, it has to be somewhere below over here, which is too big a stop loss. And the risk reward is not conducive for you to plan this trade. So the better way is let it complete the impulse move, wait for it to a retracement. It does the retracement. And then when the retracement comes, look at how the price is behaving around 23.6. There is a 80 MA which is acting. Now, interestingly, here 80 MA is acting as a resistance. It's not supporting. Price is attempting to go above the 80 MA, but it's not able to close above the 80 MA. It's facing resistance. So this is not the right time for you to enter. Wait for it to see what the price is doing. And it comes back and now 21 EMA is catching up with the price. Now the price is not violating the 21 EMA. It's holding above, right? Here is a green bar. Now, imagine this bar is getting done, right? If this bar is getting done, it's reversal bar to this prior day red bar, which is a negative close. So the way how I enter is, if this bar is going to close in the upper wick and above, it has already recouped the 23 EMA. It is already closing above while the intraday bar is getting done, right? Not the bar is closed. So that's another learning. I will quickly talk about it at the end of this slide. But for now, stay on with me in the conversation. I'm not done. In the intraday, the price makes this high. So the bar goes above the 80 MA and the 23.6. And that is also above this particular bar's upper wick and above high. That's a legitimate entry. You can enter there with a stop loss just below the 21 EMA, right? Because it is below the low of this bar and the 21 EMA is holding as a support, you can enter over here. And what the bar did, it disappointed you. It did not hold the 80 MA, it did not hold 23.6, it comes and closes over here. So yeah, the problem in entering intraday, you have to wait for the day close. But it's not given that always the end of the day is a bad entry, a good entry, and intraday is a bad entry. It all depends on your luck. So you hold the trade, right? It has not taken your stop loss, so you hold the trade and see what it does. The next day, it attempts to reclaim 23.6 Fibonacci. It's not able to reclaim 80 MA. It's coming back. Okay, I will still be patient, and I will see what the price does in relation to this entry bar that I have entered. If it's going to violate this bar, I will exit. Otherwise, I will hold the trade. And then the third day, it bounces off. Now it reclaims not only the 23.6 and the 80 MA, and then it goes higher. Now it goes up to where? It goes nearing the previous swing high, but it's facing resistance at the previous resistance level. Now I'll quickly move the stop loss below this bar and see what it is doing. Right now, that below this bar, the stop loss is also below 23.6. So to that extent, I'm cutting down on the loss that I will incur, right? Because my entry is over here, my stop loss is over here. I'm not going to lose much if the stock is going to reverse from here. And then the stock moves higher, right? So sorry for this very minute bar by bar level analysis, but what I'm trying to convey here is, by applying the Fibonacci levels as a factor of confluence to the moving averages and then studying how the bar is getting constructed, your ability to plan the trade and plan your entry is much better. And I know I've just gone rambling on this chart for a long time. I am sorry for that if somebody is getting overwhelmed, but if any questions on this slide, I will hold it.
Yeah. Hi, Basker. This is Amit here. I have
Yes,
a
Amit.
question. Yeah.
Yes, please.
Okay, now my question is with regards to how often are you recalibrating the Fibonacci? I mean, when you get an impulse, then you got a new high. So are you going to change the starting point of the Fibonacci? Recalculate it?
No. When I have a impulse move starting, when I identify the impulse move starting, I anchor my swing low of the starting of the Fibonacci, that 100% level at that point. And then I go up to the swing high of that impulse move and I anchor it in these two levels. And once I have done this, I hold this Fibonacci drawing as sacrosanct while these levels are getting respected. Okay. Now, let's say in this case, right, if the price has already broken above this resistance, the price has already gone higher. Now, this swing high is no longer the swing high. I now have a new higher high. Now it makes sense for me to recalibrate with this swing high. But as far as the impulse move is concerned, I will still consider this as it, unless and until this corrective move is long enough to disrupt this impulse move.
But there's no harm. There's no harm recalculating it and to the new impulse, right? To the new high which is broken.
You are talking about the high or you are talking about the low?
I am talking about a second move which is just begun. So you have a new higher high.
So you plot a difference Fibonacci, right?
Yeah.
You can, if you want it, you completely drop this. So once it has made this new high and there is a clear new low here, this Fibonacci retracement is not of much use to you.
Yes, yes.
You
I was
can
just
knock it
yes.
off. You can plot it from here to there. Sorry, if that was your question, you are right.
Yes, yes. Okay, okay, okay. Cool.
So
yeah.
with every new impulse move getting plotted, you plot the Fibonacci. So even in this case, right, let's say that I started from here, the price has come only up to here, right? I wouldn't know if this high is going to be taken. The bar is consolidating within the upper 50% of this bar, right? I can actually plot the Fibonacci retracement from here to this bar high, and I can still plan my entry around this level.
Exactly. Yes, yes.
How
So
on earth
do you
I'm
do
going
that?
to know that this is going to be the end of the impulse move, right?
Right, right.
I can do that also as the bar is evolving. Now, in this case, that's why I said ignore the part of the chart. If my impulse move is up to here, this is where I'm going to identify the swing low and the swing high. So in this case of the leg, okay, let me annotate. Thanks for asking this very important question, right? So if this is my impulse move, right? This is my swing high, this is my swing low. That is where I will plot my Fibonacci. Accordingly, my 23.6, my 38.2, my 50%, everything will be drawn. It's just that those levels will be too tight, right? And in those cases, I can't apply the same principle I applied previously to say a retracement of 23.6 is healthy, a retracement of 50% is okay beyond 60.
Okay, Bhaskar, let me rephrase my question, please.
Yeah.
You know, okay, when a new impulse is started, so you will draw the Fibonacci for an entry again. Now, once you get another higher high, so do you again every time recalculate it, or you carry on with the same old anchor point as a starting point?
See, if it is a continuation of the impulse, I will only recalibrate the zero. I will only recalibrate the swing high. I will not change the swing low of that impulse.
Okay.
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 As the impulse move continues to build, I will keep pushing the high of the swing high of the impulse because the impulse move is still developing. It's not over, right? What I presume as the corrective move while the impulse move is getting done, in all reality, is a minor move, right? Those are the minor trends. It's just fluctuations. Those are not the corrective moves. It is still the impulse move. So I will keep building the impulse move Fibonacci retracement. And now once a decisive swing high is made and then the corrective move begins, now I hold the swing low and the swing high as sacrosanct levels. I will not mess with it. I will allow the price to play around with these support and resistance levels. And then when it makes a new high, right, that is when I will shift the high. And if I am getting the conviction that the retracement that happened has ended and a new swing low is formed and now a new impulse is getting formed, only then I will move the swing low to that new impulse. But in which case the earlier swing low and the swing high, I will discard it. I will go for the new swing high because now the next impulse move has started. What is the point of me looking at the prior impulse move, right? I'm looking at the next impulse move for me to identify where is the correction move coming in.
Right, right, right.
Does it make sense, Amit?
Yes, yes, absolutely. I have another question. Probably
Yes,
you can
please.
answer it during the course of the presentation.
Excellent.
So, with regards to the selection of stocks, now how are you? What universe of stocks are you looking at? Are you looking at the stocks which are 52-week high, all-time highs, or the stocks which have given a certain percentage?
We will talk about it as we go
Yes.
further. Yeah.
All
Okay.
right. Thanks.
Thanks. Most welcome.
Basker ji, I have a question
Hi,
here.
Basker. Hi, Basker.
Yes, sir.
Go ahead,
I
Aarti.
yeah. So there are first of all, Adya, my daughter's name. I don't know how she is saying my name.
Sorry, I didn't get you.
No problem, no problem. So I'm just I have 2 points to make over here. Means if it can be validated by Basker because he's been using these Fibonacci tools for 6-7 years now. So what happens is on the price chart we have information of the historical price on the left hand side, which Basker also mentioned that we can have the Fibonacci drawn from a level of low to the pivot high, and then because the information at the chart on the left hand side already exists, and then it can be interpreted to see as to what are the levels where we generally the stocks retrace up to, whether it is 23 or whether it is 38 or whether it is 50. if you go back to the last screen where you have the green arrows and red arrows, so that way we can also understand the characteristics of the stock as to till which level it can retrace. And coming back to the second point,
Sorry,
which
this chart you're talking about.
this one. So if you see right from one, which is 183.82, and then you go to the first swing high, if you draw a fib over there, so it might be approximately 61.8 where the big green
Absolutely.
candle would have been made. And
Absolutely.
now when you compare it with the levels that you have actually drawn, it actually again takes support near the 61.8. So this is the kind of where people ask that how much the stock might retrace. So there is one, the information might be contained in the previous period prices as well, where you can use the fib to the swing high from a point which is a low, and then you can understand as to what is the primary characteristics of a stock that it corrects up
Correct.
to 23,
Brilliant point.
38 or 61. The
Brilliant point.
other, yeah, the other point, thank you. The other point which Amit asked was where we can whether shift the Fibonacci from to the recent swing high. But to be honest, I would not do that. I would keep the fib. I might draw it again just to see the levels. However, I keep this if this is my chart and these are the levels that I have drawn, I might keep it same on a longer term because I would have an indicative target set because after zero I would have 1.236
You're right.
and
You're right. You're
1.38.
right. You're
So
right.
there is no certainty that the price would hit those levels, but it would give me an indicative level as well as where the price could touch.
So,
Once, yes, yes.
sorry, I didn't get your name.
Rajat, it's Rajat.
Rajit.
Yeah.
Yeah, that's a valid point. That's one of the ways to do Fibonacci price targets. We have a couple of slides coming in over there, right? And what you're saying perfectly fine. It works exactly the way how you are explaining. There is another way of doing that as well. So we will quickly touch base on it as we go along. Yeah. Thanks for your other point. Yeah, you always get to know the characteristics of the stock. And very honestly, when I see the left side of the chart, if I see a chart in a price where it has a tendency to come to 50 DMA, it has a tendency to come to 61.8, I don't get excited to trade those stocks for momentum. And I said, this is not a momentum trading stock. It has a tendency to come deeper. I don't want to waste my time running with these kind of stocks, right? And this typically you will see in large cap stocks, you will typically see in F&O stocks, because those have the tendency to have a deeper corrections and they will often come and touch on the 50 DMA. I don't prefer to swing trade on those stocks. So you can use those characteristics to understand the character of the stock and also to decide if you want to really trade in those stocks or not. Now,
Yes.
stocks always change their behavior. It's not like the past behavior is what the stock should do. But once it shows you the change of character, you always can adapt your strategy accordingly, right? You recognize that there is a change of character in the stock. And then now you look at the stock with a new mind, right? That's how you have to do it. But thanks for the point, Ajit. Makes a lot of sense.
Yeah, Bhaskar,
So,
we also had a question actually.
yes, please.
So, if a stock barely retraces, for example, the price did not even reach the 23.6% retracement level in Q Power or Cupid, how do we handle those charts? I mean, do we miss those entries if we rely only on Fibonacci setups?
No, it's not necessary the
If we see
stock
those
should.
charts, yeah.
Yeah. So we'll probably go through it and then we will come back and look at certain charts, right?
Okay.
And we will look at, definitely I want to talk about Cupid because I don't know which year it was, 24 or 23. I think it was 23 December. I traded that stock. I held it in my investment account, but it was a trade and I held it for just about, I think less than 2 months, and it gave me 100% return in that period when there was no retracement. It was only going high. There was no retracement. So I love that chart. I love that stock. We will talk about those charts and specifically Cupid as we go along. Yeah.
Sure. Thank you.
So this is a stock where I was talking about how you plan your entry and all that. And here is another instance, right, where you may not have a lot of bars. Okay, where is it? Sorry, guys. Okay. So this was a very valid question, right? Like, no, now that you have the swing high there, you are able to see these levels. It's respecting 23.6 and then it's coming up to 38.2 level. So it's a healthy moving stock. But if I had plotted the Fibonacci from here to here, assuming say I'm considering this as an impulse move. Now this in all probability would have exceeded 50%, right? So what do I interpret of the stock, right? At that stage, I can say that the one thing I can say the momentum is weak, but what it means is also that I have given very short period of time for me to judge the impulse move. So typically when you hold very few bars in the Fibonacci levels plotting of the impulse move, you need to be a little more conservative or a little more liberal, not conservative, little more liberal in terms of interpreting these levels, but it still works fine, right? So here is, I think it's South Indian Bank, yeah. So it made a correction, it made a swing low here, and then it gave a very strong upside move, right? Now, anyone who would have entered anywhere over here, it's a pure luck or other tactic that you have followed for your entry that you did not, on a hindsight, you say that no, it could have been a good entry over here. This is a great entry over here, etc., etc. That's all hindsight knowledge. When it is happening, I don't know who will have the courage to enter anywhere over here while it is still above the 80 but it is too far away from your swing low. Right? There is no safety for you. It's like you're bungee jumping, but you don't know the other end of the rope is secured, right? It's like that. So you take a risk, so you play with a smaller amount of capital and all that, right? Typically, I've seen this instancing, stocks have given a strong momentum. It has given a parabolic move. Now, how will I enter there? How can I enter? Where can I put my stop loss? This is one way of doing it. You identify that swing. I don't know why it is becoming difficult to hold the cursor. Identify that particular swing impulse move, and then you plot the Fibonacci to the peak, whatever the peak that it is, right? And then you look at that levels and see if there are confluences. In this case, look at the bar. It made a very big upside move, and then that was a swing high, and the price started correcting very sharp. Right? This sharp correction, I'm sure the second day many people would have sold saying, I don't want to give back all of my profits. For even if somebody had entered here or here, they will panic and say that the stock is reversing. I'm going to lose all my profit. I don't want to do that. But if you have the patience to wait it out and see what it's doing, it comes up to 38.2. It tests, it's not, the green line is the 50%, by the way, right? So while 50% looks somewhere over there, it's actually here. It tests the 38.2, but it closes well around 38.2 level. Okay, it's a healthy pullback. I'm not going to lose my sleep because of that. And then ATMA is already caught up there, right? ATMA is already caught up there. I have nothing to worry with the ATMA being there. Now the price is bouncing over there, and that level also is the prior resistance level. So I now have confluence of 38.2 level being respected. There is a prior resistance turning support, and the price is bouncing off ATMA. Now, if I am somebody looking to enter this stock, this bar, anywhere in this bar is a fantastic entry opportunity with a stop loss just below the resistance level or a support level, and also slightly below the ATMA. And I have multiple factors in confluence to give me that even in a shorter period of time where the number of bars are very less, where the stock has given a parabolic move, I still have a excellent method to time my entry in such a way that I'm not going to lose my sleep. And if the trade works, I'm going to stand to gain significantly. If the trade did not work, I'm still not going to lose a big chunk of my profits or my money. I'm fairly well handled in this case, right? So next question to you guys, right? And this is a trade that I took, and it's actually a live trade right now. For the purpose of curiosity, I'll keep the stock name not revealed right now. Somebody had traded this stock, you would have known the name by now, but please keep it to yourself. Here is a stock which is browsing the ATMA, made a high, it came back, it was surfing ATMA. It failed to make a new high. It again started browsing. Now, this is a clear sign that there is a weakness in the momentum. 80 MA and the 21 EMA are getting closer to each other and it cracks. It falls below the 21 EMA, it goes below. So it's doing a base reset. It's coming up and now it's showing healthy move around the 50 DMA and then it's coming up higher. So it was at this point I got curious in this stock, but you know what? It made a high, it made a lower high, and it is still making a lower high at this point in time. It's only made a bottom reversal, but this is too premature for me to enter. Let me see what the stock is doing, right? So, and I'm just narrating the thought process I had when I was trading this stock, right? So one more thing, just for ease of understanding, right? In this stock, if you see the resistance line, I have drawn with an amber line. In this stock, I have drawn the resistance line with a green line, right? So this is a nomenclature I follow. When a stock is making an all-time high, I draw the resistance line as a green line. When a stock is making a swing high, but it is not an all-time high, it is a 52-week high or any other high, I mark it with an amber line. So I'm just sharing a small pointer if somebody made that observation and wonder why the resistances are all in different colors, right? So I took notice of it and say, what do I do? How I'll wait for the stock to show some more strength. What if it comes up to this resistance level and again it breaks, right? It comes up to here, again it puts up an upper week. So I need to see what the stock is doing. The next bar, it went down, but then it did a doji. So now this is the first green signal that the stock is giving me, that it is positive. Now I need to see what I can do in this stock. I have to wait for a suitable entry opportunity. The next day it went down, took a bounce of the ATMA, it closed above the all-time high zone level, right? And if I am not wrong, I think either I was not available, I was out of town, something, I missed trading my entry in this stock, in this day. And I think I was not available this day as well. Thankfully, it didn't get a good follow-through move. It was a weak follow-through move. And on both the days, I was looking at the chart end of the day. So I had put an entry just above the upper wick of this bar, because here it broke above the all-time high. So I had put a entry. So this blue line was my GTT order because I was not in front of my system. So I had put in my GTT order over there. And the stock got me entered over that blue line, right? Exactly there it got my entry done. And because this stock gave a entry, even though this is the entry level, this was the next bar which held that resistance level as a support. So my support stop loss was somewhere below this level, right? And then the next 2 days, the stock gave a very healthy up move, right? Now at this level, it is still in a healthy level, but it's too far away from the ATMA. Now, I don't know. I can't hold my stop loss at that level and wait for the stock to come back, give back all the profit I've made, right? So what do I do? How do I plot my trailing stop in these cases? And how do I protect my profit? Not 100% of the profit, but some part of the profit. But the stock is in an all-time high zone. It has given a good base breakout. So I don't want to choke the trade, right? So this is a balancing act you have to do, right? Like you have to give the stock some room so that you're not choking the trade. But at the same time, you should not leave it too wide that you give back all the profits you make. This is a balancing act that we traders will have to do on a daily basis, right? So how do you trail it? How do you do that? I plotted the Fibonacci retracement from this low to that swing high, and it gave a 23.6, it gave a 38.2. This is an all-time high breakout. The stock is coming up and making it. This is a chemical stock. There is a lot of story that the stock was having, which was positive. So I said, I'm going to hold this stock in a medium to long-term level. I'm not going to be in a hurry to exit this stock. So I plotted my trailing stop loss just below the 38.2 level. And this is also a confluence factor. ATMA is catching up. This is below this prior bar. It is currently forming an inside bar. It's in a lot of sense, this makes a good level for me to trail. So I have put my trailing stop loss in this stock at this level. And I'm very lazy. I have not changed this trailing stop loss for the stock as of now. But if I'm not wrong, it is still somewhere not too far away for me from this level, right?
Yeah, it has not reached 38.2% level yet.
It has not. It has not. This is Acuitas level yet. It has not. It has not. This is Acuitas. If anyone has traded, you would have known the name. This is Acuitas. It's respecting 38.2 level. It has not come there. So you kind of like, and as it starts to make new high, right? You keep this swing low intact. Don't disturb the swing low. But try and plot a swing high. But do it only after it has established as a swing high. What I mean by that, if here the stock is making a new high, I should not be in a hurry to push the swing low here, swing high here. The next day it forms this. I should not push the swing high from here to here. I need to wait for that to tell me that it is the swing high, right? In this case, for 3 days it was going on making a higher high. I should not be in a hurry to push the swing high. Here it made a high. The next day it made a lower high. That is when I know that this is a swing high. This is a swing high which is of significance. Only then I push the swing high from this bar to this bar if I am increasing the swing high. So wait for it to a high to hold the badge of honor that it is the swing high. Then you move the swing high to that level and then you can trade it. So this gives you a very scientific manner to trade your stocks, and also with adding factors of confluence of a mother bar's low, 8 EMA coming closer, you have all those edges coming together, right? And all those factors will make your trade more successful. And even if it fails, even if the market is choppy thanks to Donald Trump, you still will have much more satisfaction of having managed your trade properly. Right? A good trade is not a trade where you only make profit. A good trade is where you managed it well, you handled it well, you did not make any impulsive mistakes, right? You did not act out of greed or out of FOMO and you did something stupid, right? That's how you should judge your trades. In this trailing stop loss, any questions?
Sir, I have a question.
Yes, please.
This is Rajshri.
Yes,
So
Rajshri.
major issue is I identify trades well, but I'm very poor at taking profits home. So a recent example is ISMO, which I entered around 629. And you won't believe it, I gave back all the profits. I'm still holding it. Now that you taught us the Fibonacci, I just traced this on, I just put the Fibonacci on the weekly and I'm saying that, seeing that it is retracing from 0.5 level.
Okay.
On the weekly chart. So I would like to advise, sir, that how should I have looked at this trade and when should I have booked my profits? Because I was at
Brilliant point.
almost 100% profit, sir.
I get your point. I have a folder where I have a watch list where I have put in a couple of charts where I have plotted the Fibonacci and we will talk about it. So that point in time, please remind me in case if I don't remember, please remind me about ISMO and we will talk about it. Yeah.
Sure, sir. So one more stock was Dixon. Whenever you're discussing, please make sure
Please.
you
So
discuss
bring up
Dixon
these
also
two
because
stocks. We will talk
it's
about
very
it.
confusing. Daily it is showing a 6.618 retracement, and I think weekly it is at 0.236, and it is showing that it retraced in April from 0.5 and in June
do
from
that.
0.8.
We will plot as we get
Yes,
there,
sir. Yes, sir.
right?
Thank
You
you so
can
much.
help me with where you plotted the swing low and the swing high, and then we will see
I'll do
what
that.
is the best way of doing it.
Sure, sir. Sure, sir.
And that will
Thank
be
you
a
so much.
good learning for every one of us, right?
Yeah, because my major issue is I don't know how to book profits, and I almost always give back the profits or half the profits at least.
Trust me, you are not alone. Okay, trust me, you are not. I know it will not make your bank account fat, but at least it can soothe your ego, hurt ego that you are not alone in this game.
Thank you, sir. No, but I really want to see some green in my bank account.
We will do that. We will do that.
Yes,
We will
sir.
do
Thank
that.
you so much, sir.
That's the whole idea why we are doing all of this exercise. Right?
Yes, sir.
We'll do that. Yeah. So I saw Raza having.
Mr. Basker, sir. Yes, sir. Yes. On the day he had placed the GTT entry order was also going to be the earnings day. Now with that gives an added level of uncertainty to that day. What were your thought process behind it and what were your stop loss would be?
So two reasons. One is I'm insanely lazy and I'm very, very, what do I say, impulsive trader. Okay. So very honestly, to me, a stock that has been consolidating in the recent period, right? I don't give much of a concern to the results that's going to come, particularly even when they are positive triggers, right? So as long as like the stock has not had a ferocious rally after the previous quarterly result, and if it has not given a significant upside move since the previous rally, the factor that it is going to be a result day is not of any great cause of concern for me. Because a stock which has given a very big ride from the previous quarter result, even though they may put up a superlative performance, there are people sitting with very, very huge profit. They are just waiting for gullible, impulsive traders, retail traders to jump in on the news of a great result and then try to buy the stock. And these guys will dump the stock, the profit at that, dump the stock at that point in time, and they will take the profit and walk away. Whereas if a stock has been consolidating for the last, since the last quarter result, or at least for the last 1.5, 2 months, which means the people who have entered in anticipation of a good quarterly result. And in this stock, before the result came, I don't remember exactly what was it, but there were some signs that I figured it out that things are turning good, right? So I think this is one of the leading stock in the chemical sector. This was one of the leading stock, and this company always had a great reputation for being a good performer. So honestly, I didn't care much about that being a result day, right? My stop loss is there. As long as like my risk management has the appetite to digest that stop loss, I'm not going to lose my trade. I never know whether it is going to go high or go low. The only thing I know is that if it didn't work out for my favor, in my favor, I have a stop loss. I will pay that money and I'll walk out for my decision going wrong, right? I'm perfectly fine with my decisions going wrong. It can go wrong. It will go wrong. But I don't want to miss the reading of the chart. That is crying, saying this is a beautiful level for me to enter. The stock is making a new all-time high. It's moving higher. And if you, for the purpose of conveying the message on Fibonacci, I have not added the volume bars in the price chart so far, right? But the intent is not to say that ignore the volume and trade, right? As the price was building up, there were pocket volumes coming up. The up-down ratios are all getting favorable. So with all those factors, and I said, to me, the odds of stock going higher is more. I'm going to trade this stock. I'm going to put my GTT buy with my stop loss below that level. If it didn't work out, it didn't work out. I will take the loss and I'll walk away. Shamelessly, I will walk away. I have nothing to lose in it. I have nothing to prove to anybody, right? Like, no, but if it works, then my analysis is being proven right, and I will just ride the rally in that basis. Does
Thank
it
you,
sound
sir.
too
Thank you for
arrogant?
the.
Does it
No,
sound too
no,
arrogant?
not at all, not at all. It just shows confidence. Thank you.
No, it's not confidence in terms of anything else or my reading of the market. It's just that confidence in my risk management.
Correct.
When I'm putting in my GTT, I have already accepted the loss, right? I'm already enthused with the loss that I will incur if the trade did not work well with me. So I have nothing to lose any further, right? I'm already lost. So if it works, great. If it doesn't work, so be it. I'm already prepared for it. I will move on with that eventuality.
Absolutely. Thank you, sir.
Most welcome. Thank you. So any other question? Rudra?
Yeah, sir.
Hey
Good
guys,
morning.
please feel free to call me Basker. There is no hesitancy in having to add any other thing. You can just call me Basker. I'm perfectly fine. Yes, please.
Yeah, Basker, thank you very much for the session. I have already seen few of my ongoing trades and able to identify the best perfect entry. And while you're talking about this Acuitas, I just wanted to share that I have also taken an entry at the similar level, but I have not picked up my stop loss level little bit higher right now on the date of 27th October below that particular candle.
Which is okay, which is perfectly fine. You're not wrong in doing it. It's just the way how you want to manage your trade. That's perfectly fine.
Yeah, my earlier stop loss was exactly where you have actually plotted it. But on 27th only, I have taken it a little bit higher.
Okay. So one small tidbit that I can share, right? And this is not something The idea is from one of the books Mark Minervini has written. I picked it up from his book and then I adapted to it in my own way of doing it, right? What is the moving average that you should trade with? Right? This is a question that people generally have. Whenever somebody says trail your trade with a moving average. Whichever the moving average the stock respects is one very theoretical, dumb sounding statement, right? It's not dumb, it's a theoretical statement which may not apply to you at all point in time, right? My simple measure is when I'm entering a trade, if there are moving averages below the buy point, as and when that moving average reclaims my buy point, it crosses my buy point, I will look for that as my trailing stop loss. Okay, so in this case, ATMA has crossed above my buy point. Now, this ATMA is what I will be willing to trail. If the stock starts to go time corrections, right? So consolidations. 21 EMA catches up with my this thing. If I intend to hold the trade for a longer duration, I may still choose to exit a trade even if the stop loss is not hit. There are many cases where I book out and take my profit because if it starts to go into a consolidation, I will say, okay, I will exit for now. Let it be done with the consolidation. Then I will look for a fresh entry. Why should I hold my swing trade while the stock is consolidating when I know it is consolidating, right? And actually, the reason why I liked this stock was I had taken an entry somewhere even further to the left. And when it was forming this base, I was still holding. And I was cursing every single day saying, bloody, when are you going to go up? Every day it's consolidating. It's surfing ATMA, but it's not going up. And then it gave this bar. And I said, wow, it's going to make an all-time high. I'm very happy I held on to the trade. It made this high and then the bugger went back, right? So by the time it came here, I knew that it is not going to make a new high. I booked it out at this point itself. So the earlier swing trade, I was holding in a 17% position size with a very good profit when it was in this level and I exited. Next day it went lower. I was like, yes, I'm the master of the market. I know what the price is going to do. And then it turned out to be a shakeout bar. 2 days, 3 days later, it went above my sell price, right? Like, oh, probably I was too impatient. I should have did what I did here. And then it again went back and it rolled down, right? And then it started doing a base here. But here I was very clear that I'm not going to be in a hurry to re-enter the stock. Let it form the base. Let it form the consolidation. Until it makes a new high, I'm not going to be in a hurry to enter the stock. And that proved very right? Probably on a hindsight, I could have entered somewhere over here also. It's a low cheat, right? For this base, this is a low cheat or even a cheat, probably. I could have entered over here as well, right? Like, no, but that's a hindsight knowledge, right? So you just have to monitor the price, how it moves, and then you plan your trade accordingly. So your trailing stop loss, you can do it the way how you feel comfortable. It's end of the day, it's your trade. Nobody is going to be there to tell you whether you did it right or wrong. It's right as much as it makes sense to you, and it's wrong if it doesn't make sense to you, period.
Got it. Thank you.
Most welcome. So any other questions?
Yeah,
Yes, sir.
so it's clear that you are using Fibonacci to manage this trade. Did you also consider Fibonacci at the time of taking the trade?
No, taking the trade, I could not have put in
Because
Fibonacci
if
because
I was
the
looking at the
impulse
chart.
move was still on.
Yeah, but if I was looking at the chart and I was wondering where to plot the swing low to join the Fibonacci swing low and swing high, and if I join it at around 125 levels, it actually went below 50% and then came back and took out with this bar from which you have
Sorry,
joined.
Puneet, can we do one thing?
We can look at this chart later. Yeah.
When we are going through the charts, let's
Yes.
put up the Acuitas and you tell me exactly your questions and we will plot it out and see. But very honestly, in this impulse move, right, while it was doing the impulse move, I did not enter at the start of the impulse, right?
Right.
I did not rely on Fibonacci to plan this entry. My entry was more of it's breaking the all-time high, it's coming above, it's behaving well, I'm going to enter. And also because I've already traded this stock, it had already given me a good profit. This is a stock in a good momentum, I'm going to trade. So that was my basis, right? And then the trailing stop loss after it made this high is when I relied on Fibonacci. So I'm being very honest here. It's not like I did everything, all of my trading is on Fibonacci.
Right, sure.
So here is a case, right? here I'm talking about how do I trail my stocks with Fibonacci extension, right? Now, Amit or somebody, I forgot, he was saying about how you can keep the levels of Fibonacci and handle profits. Look at the future resistances that the stock can give, right? Yes, that's a very easy way to do that. You plot the Fibonacci retracement and then beyond the zero is the resistance levels the price will have as it goes above the swing high and forms a new swing highs and all that. Somehow I feel more comfortable using Fibonacci extensions and not Fibonacci retracement. The difference between Fibonacci retracement and extensions is that Fibonacci retracement shows you the potential end of the corrective move of the prior impulse move. Okay. Now, Fibonacci extensions, you plot the beginning of the new impulse move post a corrective move of the prior impulsive move, right? So there was an impulse move and there was a correction, right? And now the price is starting a new impulse move. When it is starting a new impulse move, if I want to see where once this impulse move is going to make a new swing high, where is it likely to face the resistance, right? I need to know that, right? So once it is in a blue sky zone levels, or once it has made a new high, I earlier told from a retracement standpoint, once a new swing high is made, I will ignore the previous swing high and I'll plot a new swing high. But that's for the retracement, right? That's for the next counter trend move. But when a stock is continuing in its impulse move, a new impulse move, post a corrective move after the prior impulse move. So there is a lot of language over here, so please bear with me and listen to it carefully, then you will understand, right? So in this case, this is the prior impulse move, right? This is the corrective move, and then the stock is holding this swing low. It's forming a base, right? I'm being a little patient because the stock is behaving right, okay? And then it's making a new high. It's breaking above the swing high. Now, as soon as it's coming higher, I plot not the Fibonacci retracement, but Fibonacci extension. So what it helps me do is, this is the prior swing low. I plot it here. This is the prior swing impulse high. I put that impulse high here, and this is the end of the corrective move. So this is the higher swing low of the next impulsive move. So I plot it here. Now it gives me the level of 61.8, 1, 1.272, 1.678. So as the stock goes higher, it's likely to face resistance at these levels because it is in the blue sky zone. It is still part of the impulse move. It is not at, I don't know where the next corrective move is going to begin. But until the corrective move comes for this new impulse move, this is how I plot Fibonacci extensions to help me manage a trade where I'm riding the impulse move, right? So I know it's a little confusing between using the Fibonacci extensions and retracements. So retracements is to identify the support levels where the corrective move after an impulsive move may end and a new impulsive move may begin. Fibonacci extensions is plotted to identify where the second impulse move may face resistance as the price goes higher. Okay. And so when the price reaches up to any of these resistance levels, you look for bearish candlestick patterns, you look for other signs of exhaustions, right? Buying climax, you look for volume pattern in terms of any signal that it can say that it is around the resistance level, and then you can plan your trade, whether you want to book partially out of it, whether you want to take your profits, step back and see what the price is doing, or whether you are going to give it, okay, let me wait until it comes to the 50 DMA, let me wait until it comes to the 21 EMA. It's all your call. But it just that gives a visual level for you to become more alert and observe what the price is doing. This is like you're in a signal, the signal turns amber, now you automatically get ready. It's not at a sign for you to do anything, but you just become ready. Is it clear? Is it making sense, or any questions?
Yeah, hi Bhaskar, this is Amit here. Just to share my experience with the same extension as I use it, when the new swing high is formed and a new swing low is formed, so I will take it as a measured move from there, and I will probably look at a 2x or a 2.5 or 3x, which can again be used as a Fibonacci. Just sharing my experience with you.
Absolutely, absolutely. That's what I said. End of the day, the craft is yours, right? You can play the way how you want to play it. You just need to know the method of how we are doing it so that it's not some random mumbo jumbo that we are doing, right? Like, there is a clear process that we are following. There is a systematized way of us studying this and doing it. Thanks for sharing, Amit.
Thanks.
So here are the two charts, right, where I've kind of indicated how you can switch between the retracements and extensions to plan your trade better, right? Is the chart of the same stock, right? The swing low and the swing highs are the same. I have not changed it, but I've just shown it the part where it is making a new high, right? So this is a swing low, this is a swing high. I plot the Fibonacci retracement and I see what the price is doing. It's consolidating, it's doing a time correction, it's waiting for the 50 DMA to come, right? And assuming, say, this has not triggered my selling or anything, I can just wait and see what the stock is doing, right? I can look at it and say that, no, okay, here it comes to the 50 DMA, it's giving a strong bullish bar. Let me see what it does. And it gives a next bullish bar. So there is a clear follow through. Narrow range over here is getting breached. So you may plan an entry over here, right? That's also you can do. You may plan an entry over here, but it's a preemptive entry. You are not entering after the new swing high is taken. But anyway, you can plan a entry over here. The impatient me would have taken an entry even in this bar itself because there is a confluence. It's holding 38.2. It's below the resistance support. I can put it below the 50 DMA and I'm good. It's a small stop loss and I will try to take this trade and see how it goes. The minute it puts up this bar, the minute this swing high is taken, now I want to know what is the runway that this stock has got to go further, right? So immediately I hide this retracement and I plot a extension from the same swing low to the same swing high, and I now know there is a swing low over here. I plot that, right? This is the bar where the next impulse move started. So I put it at that bar level, and now I'm seeing 61.8 as a resistance that it may face. I've entered over here somewhere. Now that gives me a good zone for me to plan my trade. And okay, now this much is what I'm willing to look at. When it comes to the 61.8, I'm going to think through to see whether I want to continue to hold this trade or not. And the best thing that one can do is when it comes to that levels, and if there is a bearishness, if the price is showing some signs of weakness, you sell into strength. Even if you don't entirely exit, you scale back. If your position is 20%, you bring it down to 10%. If the position is 10%, bring it down to 5%. You take away some part of your profit and then you can see what is the price going to do. How is it going to behave around this zone? Whether it is going to be able to break above that level or whether it is going to give back. It cracked, it came below. I just took my eyes off and said, I'm done, right? So you could have either taken some part of the profit there, and when it violated the ATMA, you could have taken the rest of the profit also. So using these two tools, right, you can, in a way, plan effectively how you want to time your entry because it's adding to confluences. And once you are entered, how do you manage your open profit, right? Unrealized profit. How do you manage it? And sometimes you may say, okay, this is a positional trade. I'm not in any hurry. I'm going to look at 50 DMA violations as a reason why I should exit this trade. Perfectly fine. It's your call. But you have an option to do it in other ways also. Now, is this making sense? Is this slide how I use both these tools? So moving on, right? And this is a very classic question that keeps coming up in our group time and again. And by no means, please don't take this as an offense or a critic of any of us as an individual. We all are human beings. We all have our own biases and psychological pitfalls. But generally, you will see, even in the Twitter, right, you will see that there are often people who will come and claim how they caught a stock at its lowest level and how they managed to make a big profit. It's essentially a psychological factor called anchor bias. What is anchor bias, for those of you who may not have heard of it, is that we see that the price made 891 and now it's come to 732 and it's forming a higher low, it's showing a higher high, it's moving higher. I see a lot of positive in this stock, and now if I enter it at 770 level, I have a big potential to make profit. Or at least if someone is going to enter if I tell someone to enter the stock at 895 level or 900 level, they will think, oh shit man, I lost so much of money. I could have entered it at that level and I would have made so much of money. That's a hindsight analysis. That's a hindsight knowledge, right? So here is a stock which has fallen, right? And now it's tempting us with a rally to the upside, okay? Now, with what we have seen so far, right? Keep this in mind, right? Where I say, or rather, where was it? Which was the slide where I had it? Okay. 61.8 golden ratio. It's a retracement. It's not a retracement, it's a reversal, right? So in this chart, tell me now, if you want to buy, where would you buy? Just tell me the Fibonacci levels. And you have to have a reason why you would buy it at that level. Anyone?
Because I was not using Fibonacci until now, right? I would have considered a stock to come back here, so that moving average also catches up and plan an entry over here.
Good. That's a good
Right?
level.
Something
That's a
like
very good
this,
level.
keeping my stop loss just below this and entry price at this.
That's perfect. Perfect level. Anyone else? Any other? There's no harm. There is no harm. You can choose the level, and I will tell you where I would have taken the entry if I were to enter this stock, right? Without the
If I
Fibonacci.
would have taken an entry in this one, I would be looking at only from price action based this thing, forming a double bottom and buying at 749 with a stop loss below that.
Brilliant. Exactly. Exactly. That's the level where I would have gone, right? That's exactly the level where I would have gone. And that's the first level entry, right? The second level entry is when the price has reclaimed the 21 EMA. And now the 21 EMA is started to slope up. So I would have, even if I had not entered anywhere over here, I would have entered over here. And then when the 8 EMA is coming above, and this is forming inside bars, right? Anywhere around this bar itself is an entry level for me. Okay, the impatient me, right? So the reason why I deliberately kept this chart at this level and asking for this question is that this is what we see as the chart is developing, right? It forms a base, it goes higher, and then our monkey mind is so wired crazily that it will give you 10 reasons why you should buy. And it will tell you reasons why you are a jackass if you don't buy it at any of these levels and going to buy it at the higher level, right? And that's how our brain is wired. But what happened? Oops, sorry, it's in a drawing mode. I didn't realize. It formed those inside bars. It came below, right? It went below. It formed another higher low, right? If I missed it here, this is a screaming buy. I should not miss it anyway over here, because imagine if I had entered here, I would have made so much of profit, right? I missed this much of profit. It is still above that. It's forming a higher low. It's a clear sign that I have to buy this stock. On the daily basis, if I'm looking at it technically, the stock has given me multiple higher lows. It had a great upside move. This is, by the way, HDB Financial Services. One of the IPO was most sought after. lot of people were jumping in to buy this stock. Everything is hunky-dory. It did not make a higher high. And then it started to fall. It just rolled over. I'm not holding this stock. I'm not traded. So if I say anything critical of this stock, it should not be mean. I am being what do I say, sadistic, and I'm mocking other people who would have lost their money on this. But it's very sad that people are jumping in and trying to catch the bottom for FOMO and not maintaining that discipline and having the patience to wait for the price to prove to you that it is no longer a downtrend. Because let's face it, right? This is a zero. This is a minor pullback. This is a healthy pullback. It has gone up to the 50% level. This is a psychological level. The price did not or could not go above the psychological level. When I say 23 and 50, it's of the downtrend, right? The stock is in a downtrend. It's coming over here. You could not, psychological barrier level could not be broken. So better wait. Let us see what the stock is doing it. It takes support at 23.6 level, right? These Fibonacci levels can act as a resistance and support. It gives the support at that level and then it goes higher. But this time 38.2 level itself is not allowing the stock to go higher. So what do? It's even more a higher confirmation that even though it makes a higher low, it is not able to make a higher high. So we better wait for it. It makes a lower low. It now comes and now 23.6 itself is acting as a resistance. Now where are the moving averages? Here the moving averages were giving us a buy signal. Here it tempted, but thankfully no one would have got tempted over here because it was a too crowded zone. But here the 21 EMA is acting as a resistance. 23.6 is acting as a resistance. Price is going further lower, right? So the point I'm saying is next time you get tempted by some chart on the Twitter or on your own screen where it shows you it has already done the bottom, it's reversing. No matter what the fundamentals are, no matter what the story is, what the catalyst is, your mind has the propensity to find you enough reasons to make you make a mistake, to make you break your discipline. But if you were to be objective and if you say that, like, okay, what is the price chart is saying? While the catalyst is all great, while the stock is in a fantastic industry, this is a market leader, this is next to so-and-so stock, does not matter. What is the price telling you in regard to its primary trend and what is the corrective move ended or not? Now, when you hold that acid test, automatically your FOMO will disappear. The minute you bring in the discipline to apply these structural viewpoint to the chart, it just shatters every one of your bias. It shatters every one of your hypotheses that you may be building in your mind and forcing you to take a trade. You will take a step back and you will say, I will not do it. So very interestingly, when I was having this casual chat with Puneet, when I asked this, right, he came up with a brilliant question, right? So, oh, okay, so you will wait for the stock to retrace up to 61.8, which means you don't trade cheap, low cheats, right? You don't enter low cheats or you don't enter high cheats, the low cheats and the cheats. So any comments? Anyone has any answer to that?
Yeah, Basker ji, when we are buying above 61.8 level, then we are basically making more probability here to be successful trade rather than basically we are not sure that continuous uptrend has been created on the charts.
Yes. So the question is, in that case, you will not enter a trade on a low cheat or on a cheat basis. Is that right?
I think we'll look at the trend first on a weekly
Brilliant.
time frame, as you pointed.
Brilliant.
So then if it is making a low cheat or cheat, then maybe it's
So
a good idea to.
thank you so much. This is a stock, this is a chart, very recent, this week, or rather last week, very recent stock, right? Axis Kids. I deliberately kept the name because I know everybody will be able to relate to it. This is the second impulse move. This is the next impulse move, right? Or rather, not the second impulse move. This is the next impulse move. The long-term trend for this stock is a heavy, strong uptrend. This is the corrective move. right? The stock made a corrective move. It formed a base. It went up. It formed the next end. So this is the end of that impulse move, and it started to come back, right? And 23.6 and 21 EMA confluence is there. It came higher. It could not make a new swing high, and then it started to roll down. So wait, let's see what the stock is doing. It falls down, it falls down, it falls down. It breaks below the 50 DMA. Okay, so now what is doing? It's breaking below the 0.5, 50% Fibonacci level or the 0.5 level. Okay, so what are we going to do? It comes and it bounces exactly at 61.8 level. So if it, assuming say if it finds the low cheat over here, that is still a legitimate buy, because the impulse move is the dominant trend is still uptrend, right? This is just a kind of like a pullback within the impulse move. It's not a corrective move, right? This is a corrective move. This is not a corrective move. It's just coming back. For all what you know, this may be start of the next new trend, right? But because it is such a deep level, this is not an ideal momentum trade for now. This could be a good potential positional trades, right? You could plan your positional trades right over here itself, right? I did not enter on this day because 50 DMA and all the moving averages were as a resistance. So I waited. Next day when it gave this move, I entered somewhere over here and I've added this stock in my positional account because it is also breaking above the previous swing high, previous resistance level, right? So the point is, if you really want to buy the dip, right, buy the dip in a stock which is having a long-term dominant trend of an uptrend. When that dip is matching with a additional one or two factors of confluences. It's not like blindly any dip and every dip is buyable. When the dip happens in a stock which is in a dominant uptrend, in a level, at a level, not in a level, at a level where there are other factors of confluence, it significantly enhances your order of success, and there you take the entry. So for those who are very keen to take a reversal trade and keen to enter the dips, my humble request and my suggestion, plan it this way. Your success is much, much higher in terms of doing it like this. So some of the points to ponder, right, in summary of all what we have spoken about so far. And a lot of this is just a reiterating of the same point I keep talking about again and again and again and again. The whole intent is to get these messages to go deep into your mind so that you don't miss out on any of these points. If you take back these pointers, it'll significantly improve in terms of your own experience of how you look at your trade and how you plan it and how you manage it. So in a major trend, and read that trend as uptrend, right? A retracement up to 38.2 is a healthy pullback. Pullback beyond 38.2 to 61.8 is considered a major pullback. So when I say a healthy pullback and a major pullback, I'm talking about saying that a major pullback may invariably also end up becoming a consolidation base. It may run for more than a month or even few months. So if you don't have the patience, you don't have to treat it like a pullback trade. You can always keep your... So, okay, I'm taking a step back here, right? Why are we doing this session? We are doing the session because a couple of weeks ago, Puneet had a session on pullback trades. How you can plan your pullback trades through pro setup tools. What are the various ways in which you can identify stocks to pullback trades and all that, right? Like, no, so this is just an extension. So this is basically a layer of skill, proficiency that you are adding, which will enable you to trade that pullback trades in a much better manner, right? And this, trust me, if you pick up these learning and apply it on top of what Puneet was sharing the other day, this alone can be your whole trading system, right? You don't need to break your head anything else. You don't need other magic indicators. You don't need to attend any other master class or join any other paid subscription classes for any other mentors. Just take this learning, overlap it to what Puneet had shared as a pullback trade, and then you are sorted for life. So a healthy pullback is up to 38.2% level. Until then, you treat it as a pullback trade. Beyond, if it goes to 50% and 61.8, consider it as a consolidation base or a positional trades and handle it in that level. Personally speaking, a move beyond 61.8, I deem it as a trend reversal. I just take the stock away from my trading purpose unless and until it can show a sign of reversal and prove to me that no, it is worth being part of my watch list. And long-term players and institutional buyers will generally come in the range of 50% to 61.8. So in a stock which is in a dominant uptrend, particularly where the dominant trend impulse move is in, 50% and a 61.8 is always a good zone to look at. And when a stock has already started in a dominant uptrend, if it is coming back to the 50 DMA for the first time or the first 2 times, if it comes to the 50 DMA, it's a good zone to buy positionally at that level. So don't miss out. If you're a positional player, don't miss out a stock which is doing a pullback to its 50 DMA at least the first 2-3 times, right? When a price takes support at 50% retracement level and resumes its primary uptrend, right, it should ideally go past the previous swing high. So if it fails to go past the swing high, your shortest moving average, whichever it is, 8 EMA or a 21 EMA, whatever that you use, the violation of that EMA as a swing trader, momentum trader, it should be a sign to just sell it and run away. Because as per Jesse Livermore, that is the reversal pivotal point. If it cannot make a new high, you just put the stock on the sale and take the money and run away. You will save yourself a lot of the profit you have made, which you will otherwise give it back to the market. It's okay if it fails you and then resumes a new high and goes higher. That's okay. That's part of the game. But at least you protected your profit. And now we will go and look for another stock where the corrective move is ending and a new upside move, impulse move is starting. You can ride that stock and make money. It's not necessary that you have to make money only in the stock that you currently are holding. You can always look for other stocks to do it. A Fibonacci level that a stock holds is also a measure of its trend strength. A good stock with a strong momentum should hold 23.6, at worst should hold 38.2. If you're a momentum trader, don't worry about a stock which cannot hold either of these levels. And commonly used levels for retracement 23.6, 38.2, 50% and 61.8, and don't even look at it beyond 61.8. If you're a momentum trader, 23.6, pullback trader up to 38.2, you're a complex pullback trader slash consolidation based trader, 38.2 to 61.8. Okay. Extensions, you can look for managing your risk upside and managing your open profits, 61.8, 100%. So in summary, retracements will tell you where you can get in and extensions will tell you where to get out. It's not necessary you have to get in exactly there, and it's not necessary you have to get out exactly there. But it just gives you a visual indication that these are the levels where you need to act, and you can plan it in that sense. So stocks rallying after taking support of the 50 DMA and it hits a resistance, it will then go into a time correction. So you cannot, then you can handle it by looking at Fibonacci retracements and Fibonacci extensions, and that will tell you exactly how the stock is going to play up as it goes further. So in this case, it had a impulse move from here, it faced resistance, it did a pullback, it came bounced exactly at 50 DMA. And then it went and faced resistance at 61 point, and then it again came back to the. So by combining extensions and retracements, you can plan and manage your trade quite effectively. So just because I spoke so much about Fibonacci, and no, you are quite excited about Fibonacci, does not mean we just go and catch every single swing points and plot the Fibonacci and say that we will force fit Fibonacci and do it. There may be somebody who says, okay, Fibonacci is such a wonderful tool, I'm now going to use it in 3-minute chart and I'm going to trade. Sorry, don't force fit Fibonacci. It cannot substitute your skills. It cannot substitute your mindset, your psychology. So use it as an aid, as a tool to help you trade better what you already are doing it. So in a range bound or a choppy market, if you're going to put Fibonacci, it's not going to work. It's going to kill you, right? These levels make no sense if the stock is where you can't even spot a primary uptrend, right? A dominant trend has to be there. So which is why I had it in one of my first slide. If there is a primary trend is uptrend, then only you go long. If the primary trend is downtrend, only then you should go short. So if there is no clear primary trend, there is no compulsion for you to trade that stock. Nobody is holding a gun on your head and asking you to trade it. There is no bravery award. You are not going to get a Paramveer Chakra just because you traded a choppy stock, right? So there is no bravery award in the market. So don't try to risk your capital and try to prove you are great in front of anyone else. So don't have to do it. Don't force fit it. Never, 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 never ignore the primary trend. And if one learning that people can take from this session, I will be very obliged, grateful if you take this one learning, that next time when you're going to take a trade, make sure that you're trading in the direction of the primary trend. If the primary trend is uptrend, you're going to enter as close to the start of the impulse move after a correction move. Your chances of success significantly boost. And just because a particular swing low and a swing high gives me too deep a stop loss, if I am going to randomly push the swing low to a higher level so that the Fibonacci gives me a shorter stop loss, sorry, the tool is not at wrong. It's my use of the tool that is wrong. And just because I am an impulsive trader, I have plotted a Fibonacci, and I heard in some session somebody spoke to me saying that a strong momentum stock will hold 23.6. So the stock comes to 23.6 and I'm anticipating a reversal here. I'm buying it. I'm trading impulsively. The fault is on me, not on the Fibonacci, right? So Fibonacci may not fail. It's just that our interpretation and our impatience and our own psychology, our lack of discipline, that fails us. And just because there is Fibonacci, that doesn't mean I should put the entire capital into one trade and risk, right? Adhere to the proper risk management and everything else will fall in place. So what are the edge that you can get in terms of the trader by being a Fibonacci, by being a trader who uses Fibonacci in an effective manner? Or how can you use Fibonacci to help you gain more edge in terms of your trade, right? Again, I am sounding like a broken record, but no matter how much ever I repeat, the emphasis is still not there 100%. Trade in the harmony with the trend. Don't go against the trend. Let the retracement guide your entries. Don't be in a hurry to chase. Chasing is only for dogs, not for us. We will wait for the retracement to finish. We will wait for the corrective move to finish. And then we will look for the edges and then we will enter. And particularly in the case of a swing trade, plan your exits, at least the partial exits, based on the Fibonacci extension, should the price show you a sign of weaknesses. If a stock is in a strong momentum, it's just zooming up, be a guest, ride the trend and make money. Don't disturb the stock which is busy compounding your money. So don't need to go over the price target and fixate your mind that I'm going to exit it here because this is my target. You look into riding the trend while the trend is helping you make money. Why are we disturbing the stock which is busy compounding our money? Let it make money. We will wait for it to show signs of buying climax, wait for it to show signs of weaknesses. Then we will take the profit and we will walk away. And that way you are not going to feel guilty that you missed a part of the ride. And the stock is appreciating you for picking up the right trade, and the stock is giving you money. Why are you saying, no, I don't want to take more money, right? And with all these levels, always look for confluence. The confluence, higher you have the confluence, higher is your edge. And never compromise on confluences and never underestimate what these different independent confluential factors can help you trade. And last, be patient. There is no hurry to enter. Let the corrective move end. Let it start the new upside move. Then we will enter the trade. So I will quickly move into the charts, right? You're able to see my this one trading view.
Yes, sir, we can see it.
Yes. Yeah.
Okay. So quickly I will add Ismo, Dixon, and Cupid. Okay. Oh, sorry.
Add Equitas also.
I'm sorry. I was just typing.
And if possible, Apollo Micro as well, sir.
One second. I'll just add Acutus, Cupid is more. Did I, Dixon, somebody asked. And sorry, what was the last name?
Apollo Micro.
Okay. Apollo Micro.
And one more Basker.
Aether Energy as well.
Force Motors.
Yes, we spoke about Force Motors. Why is it? Oh, okay. That's the first talk. Apollo Micro, Force Motors.
Indigo, sir.
Interglobe.
Yeah, yes.
Aether Energy, which is still developing. So,
okay. This is one heck of a stock here. It's giving, and Puneet spoke about Q Power. How can I miss it? Okay. So how do we go over it? Okay. So let's go with ascending order so that we are not. Yeah, sorry.
Seems like Aether didn't get in.
Oh, I'm sorry. Why did I miss it? Okay. So we'll go from one by one in the ascending order so that nobody is feeling they have been badly treated. Acutas. So what is the question? Sorry, whoever had the question on Acutas, if you can just ask your question.
Right. So it was my question. I wanted to know whether when you were planning an entry in this stock, did you consider, was it this stock or some other one? But yeah, so when you were planning the entry, did you consider Fibonacci into your analysis?
No. The entry was primarily, this is a VCP, right? This is a wonderful VCP. It bounced off the ATMA and then it gave a very strong bounce, right? So I entered somewhere over here, right? The chart I showed is in this zone, right?
Yeah.
This is the zone I have shown, but this is a VCP kind of a stuff. It bounced off the ATMA. It had a very strong result day. It came back, but then it did not give back much. So I plotted a Fibonacci between these two levels, right? See, but some of these things I'm doing is a bad thing, right? Like, no, this is, if you hold me to the session that I conducted, you will slap me saying, how on earth you are considering this as an impulse move? But for my entry planning perspective, I did. So don't take these things, but I'm just sharing you how I planned it, right? So it came back, ATMA, it's bouncing 38.2, it's holding that level. So I entered somewhere over here, right? When this bar came, I think I entered here or here. I'm not sure which one I entered. One of these bars I entered. And then I was riding this rally.
This was the first trade that you took in this stock.
Yes, that was the first trade. So then, because I was in here, I think I entered somewhere over here or here, right? It gave a very clear sign that it is now going above and all that. And then this zone really took my patience. What the hell am I doing? This is a swing trade. I'm holding it. It's moving sideways. It's not going anywhere. It's getting tight and tight and tight and tight. What am I doing? And then it came here, right? I said, I'm already entered here. I'm already sitting in a profit. What I have to lose, I'll wait for it. But then consecutive days are upper week. And then this came below. So I said, if violates ATMA, I'm going to exit. It violated the ATMA because my profit margin is not much, right? I entered somewhere over here. My profit margin is not much. Though I'm in profit, it's not much. I said, okay, I'm done. This stock is moving sideways. I'm not going to enter this stock for now. It means it has to go for this much of price tightening. I expect the stock to rally higher. It didn't rally higher. So I said, let it consolidate. I got out. I got tempted by this shakeout bar. I said, like, no, it has done a shakeout bar. Now it's going to go higher. So I was looking at this high. It gave this tempting bar. I entered here one small position. I got out on the same day. This moved and I got shaken out, and I said, like, I've already exited this stock once. I'm not going to enter it anymore. Let it form a good base now, right? Because this is again a lower high compared to this high, right? It didn't make a new high. So that is what one of the point to ponder is. If it's not making a new high, watch out, be very, very careful about it. It broke, it went below. This is a bullish engulfing, right? This is a bullish engulfing, reclaiming the 50 DMA. So now I got again interested in this stock. These bars were very tempting. So I said I should watch out this stock, but I'm very scared. I need this level to be taken out, right? These are very interesting zone to enter, but if I look at this base, if I look at it from here, where is it? If I consider this as a cup, right? And this as a handle, right? This is a good pivot, right? Point taken, valid. That's a good pivot, but it's below the 21 EMA. You find your own reasons why you don't want to trade at that time, because it's a hindsight analysis now. But at that time, you have your own doubts whether it is going to hold, it's going to go further down. So I waited, and then it started to give these bars. So
this bar was a very good 50 EMA undercut also.
Absolutely, absolutely, absolutely. That's a very legitimate entry level. That's a very legitimate entry level.
Right, but if you zoom out the chart and then try to join the swing low and swing high. No, don't. You are on 75-minute chart now.
Okay, you want it?
No, let it be daily and zoom it out. Yeah. So if we try to join this swing, sorry.
I think you can plot.
Okay, so if we try to join from here to here, this swing low to this swing high, I think this breaks the 50% or 61.8% retracement level.
Correct. It tests the 50% level.
It tests the 50%, right? It did not break it.
The previous bar holds around 50%. This one reclaims 50%, and it also reclaims the 50 DMA. And then the follow-through bars.
Yeah.
The follow-through bars are also reclaiming the other key moving averages, right? So I will take a trade. So my entry was here. My entry was in this bar, which is the high of those bars. And I'm still holding this trade. I think I'm still holding the trade, and I'm fine. Because it's holding above this mother bar. This is where my stop loss is. It's holding above that. Now,
I have right to join this swing low and this swing high. No, this is the one that you are using for managing it. But if I was planning an entry, was I right in joining this swing low and this swing high?
No, you could, if you are for this entry, this is a good swing low, right? For this entry, to enter in this swing, that is a good Fibonacci level. But it has come here and it has formed now. Now, if you want to enter, you have to wait for some good price action over here, right? It's kind of like holding ATMA. I'm now doubting whether it will be able to make a new high or whether it is going to go. So I'm going to wait for this stock to show me a new swing high. If it can't make a new swing high and it's going to go lower, which it already kind of like did it, but this is not a swing high. But I'm just saying, if it's making a new swing high, and then I will continue to ride the trend. But if it's not making new swing high and it's coming lower, I will look for the first sign of weakness and I will exit.
Right.
So this is
fine. Understood. Thank you.
Acuitas, Apollo Microsystems. So, sorry, what is the question in this, please?
Yeah, so I'm Shashi here, Basker. Yeah, so just to give you background, so it's kind of positional trade for me, and I'm new to Fibonacci, right?
No problem.
And I already had a 15% allocation, one-time allocation early this year when market was choppy and this stock was giving good PV action, price volume action. I got into it with that basis, and then I rode it so far. and it's kind of positional trade for me. So how do I apply Fibonacci extension to decide my,
Very good
stop
question.
loss as per your thoughts?
Very good question.
And anyone else also knowing much better about this after Bhaskarji can feel free to jump in.
Absolutely. There is no second thought on it. We are all for sharing. Currently, we don't know if this is a swing low. Okay. For this impulse move, right, for this corrective move, we don't have any sign that the corrective move is end. Okay, it's below all the key moving average, it's still retracing. So, okay, hold on, so this is the extension, right? We'll first plot the, okay, it's currently above around 38.2 level. We need it to show some signs of bounce from here, right? Unless it shows the signs of bounce from here, it is too premature for us to consider this corrective move as done. It is still in progress, if you ask me, right? So it is in a corrective move. There was an impulse move, and in the process, it is still building the corrective move. It should show a sign of reversal. Now, let's say that it bounces off from here. Then you can go for the extensions and say that, okay, here is a swing high, swing low, here is a swing high. And let's assume, say on Monday, it starts to move higher, right? Because you say it's a positional, I will leave it to your judgment whether you want to go strictly by the Fibonacci 61.8 or Fibonacci 1, so on, right? You could trail it with 50 DMA, but it's already below 50 DMA, but your 50 DMA is sloping up. So you could give the stock a little more room to play around, but more so if you are sitting with some decent profit, right? So that's the way how you can trade it. But if you want to use the extension, we need the next impulse move to start. Without the next impulse move starting, there is no way you can conclude that these Fibonacci extensions are going to make sense because the stock is not done the corrective move. So there is no way, there is no point in us worrying about which is the extensions, right? I would still, for this case, I would still use the retracements and see up to what level it is going into the corrective mode. Does it answer your question?
Yeah, kind of, but the extension I was trying from 2023, March 2023 low
Then,
level.
yeah, you can do that also. Okay, so
Yeah.
which means you are doing it in a weekly chart level, right?
Yeah, weekly
But
chart.
bear
Yes.
in mind.
Sorry, I forgot to mention. Yeah.
Yeah, no, it's okay. That's fine. That's fine. But bear in mind, you need to pick the see. This shows the stock is in a dominant uptrend, right?
Yes.
But where is the impulse move? Where is the start of the new impulse move? The start of the new impulse move is here, right? If you are a little bit more liberal, you can start from here and say that, oh, this is an impulse move, this is a corrective. So this is the first impulse move, this is the first correction, this is the second impulse move. But the second impulse move is already done. It's correcting, it's in the corrective move of the second impulse move, right?
Yeah.
So now if you're going to put a Fibonacci somewhere there, it's force fitting the Fibonacci, it's going to give you some misleading information.
Okay. Okay. Got it.
Yeah. Okay.
Yeah. Thank you.
Thank you. Thank you. Ether energy. Okay. So what is the question in this?
Yeah. Hi.
Hi.
So here, so ideally, where would be starting of the impulse move? Because I see, should I be looking at the second candle of the IPO?
That's
Because
the
it's
low, right? That's a
it's the
swing
low.
low for this dominant trend. See, in a newly listed stock, your daily itself is a dominant trend. Okay. Because you don't have a history. So your daily itself is a dominant trend. And in this case, that is a dominant low, right? You plotted the swing low from there and you plot it there.
But there are lower highs that were made after that, right? So should we consider a low after these
now
higher?
In what we are seeing right now, where is the swing high?
I think it's where you have
789. 789. That's a swing high, right? Now let's assume, say, I will delete this. Let's assume, say we are here. We are here. Okay. This is what is your question.
Correct.
Okay. Now, sorry. It starts from here. This is swing high. Okay. Because the impulse move has not had a sizable move, right? The Fibonacci levels are too tight. So at this juncture, if you are going to plot Fibonacci, it is going to mislead. Now let's say that here it has come. Okay. Now if I plot it here, it's holding about 23.6, right? And then I let it go. What the price is doing. It's still within that level. Now it's breaking above. Now it's making a new high. So now I am changing my swing high to that high and see what is it going to do, because I'm trailing the stock. Okay.
Right.
So I'm going to wait and watch, see what it's doing. It's coming back. It's consolidating. Now it's again making a new high. Okay. So now I again pause. Okay. Now I will plot it. Okay. So now what it's doing, it's again tracing with ATMA and holding with 23.6. Okay. So now what I will do, it's consolidating. Okay. It's coming up, consolidating, coming up, breaking above. Okay. It failed. So I'll wait for it. It's come down. Okay. Now it's bouncing on 21 EMA. It's coming up. It's now going higher. It's making a new high. Okay. Now it's made a new high. So now I stop. So now this becomes my next swing high. If you notice, in all of this, I have not changed my swing low.
Right.
I'm only changing the swing high as the rally is continuing, right? For me to manage my trade. Okay. So now what it's doing, it's putting up the bars. It's still trying. Now it's making another new high. So I'll wait for it. So now it's again coming back. So this is how you monitor it as the price evolves, right? But see,
Perfect.
in a very true sense, I wouldn't be doing it on a daily basis. I wouldn't even be doing it on a intraday basis. I will wait for the impulse move to end or show some signs of, okay, this is a swing high, and then now the stock is going into a consolidation. I might have to look what the stock is doing. So that's how you do it. Well, I don't want us to act in an impulse, right? I don't want to act in an impulse and get shaken out with one odd, long, minor trend bar. That taking you out of the trade. Yeah.
True. Thank you. And one more thing. So now that we have got this retracement thing visualized clearly, so if I want to do an extension on this, so
where to where you want extensions? Here to here? Okay, first of all, again, the same point, right? I don't even know if this corrective move is done, right? There is no sign for this corrective move to change. So, okay, let me do it this way. Let me see how it shapes up in this instance, right?
Yeah.
Okay, now it's in the vicinity of the 61.8 of the prior move. Okay. So I'll see what it's doing, right? It's not, because the corrective move is too short, right? This may not be a very reliable level.
Right. No. But just to understand the criteria, like how do you do it?
Yeah.
So I think
This is how I do
got
it.
my answer. Yeah.
This is what I do it. Okay.
Thank you.
No problem. The next stock is Cupid. Okay, brilliant. So why am I going this far? It's because it had a magic run. Sorry. Oops, where was I? Okay.
December 23.
Yes, I traded in this zone. I traded this thing. I don't think I traded the full. I traded somewhere from here. But my entry in these levels were not on Fibonacci. It was as a high tide flag setup because it had a very long base, and then it came with a big breakout. It formed a very tight high tide flag. I traded this. I was little nervous in this level. When it was forming a consolidation, I held, and then it gave another boost. But I think around this level, they announced some stock split and bonus issue, etc., etc. So I booked out. So this was a positional trade where I held it and I rode it very, very high. So in a stock like this, where the move is very parabolic, your 23.6 will probably not be the best judgment, right? It may not even come there. So how do I use Fibonacci in those cases? Like, it's hard luck, right? Because there is no retracement, there is no corrective move for you to plot a retracement. In all sense, right? This whole move itself is an impulse move. Okay. This is a minor time correction within the impulse move. This is a minor correction within the impulse move. There is no corrective move at all. Until here, the primary trend is consolidation. From here on, the primary trend is uptrend, right? So in a stock which is in a impulsive move, it's very hard for me to plot Fibonacci retracement and see where the corrective move is ending. For me to write the next uptrend, probably I could have done it in this zone, right? But that time in this stock, I was riding it as a high tide flag. I did not use Fibonacci retracement. Okay. Same will be the case with Q power, right? The first few charts that I showed, where I showed the price and I showed it, I didn't trade this stock in any way with Fibonacci retracement. I was trading it because it had a nice base, it had a nice price action over here, and then it gave an IPO-based breakout. So I entered over here or somewhere over here. I'm not too sure. I entered in one of those levels and I'm still holding. Now, in true sense for Fibonacci retracement, this level can be considered as a retracement, right? So let's plot the Fibonacci. It's respecting 38.2 on the weekly. It's respecting 23.6. Now, one thing you all have to bear in mind. I'm very conscious of the time, but I'll just have to convey these messages, right? One thing you all have to be very, very careful in your mind. Fibonacci levels are between the price levels. It has got nothing to do with the time frame. So once I have plotted this, once you have got these levels with the price zones, no matter what chart you're looking at, the levels are still going to be the same. The levels are not going to change. The price levels are not going to change. It's still going to be the same, right? So you can plot it. So in this case, look at it, right? The price consolidated around 23.6. It came up to 38.2, but then it was respecting 10 weekly SMA. So it's okay. I have nothing to worry about it in this stock. It's behaving fine. I'll wait. It came up to this. This is the first pullback to 10 weekly SMA after the stock gave the IPO-based breakout. So this is a William O'Neill's strong buy point level also. 3-week tight. That's also a confluence, pattern confluence. It's bouncing off the 10 weekly SMA and then it's giving up a big bar, which is a range breakout for these long ranges. You enter once again and you hold it. It's still behaving right. So I'm holding this stock from then on. So I entered somewhere over here some and I added some over here as well. Now this, because of the second part, my overall position is not so great in terms of the profitability, but overall I'm still profitable in this trade. So that's how I manage it. So if your question is in a strong parabolic move stock, how do I place my stop loss? I mean, how do I place my retracement? It's only by way of, first, is there a corrective move? If there is no corrective move, there is no point in looking at putting in Fibonacci retracement. Is there a room for me to put in a extension? Unless and until there is a end of a corrective move, putting in Fibonacci retracement makes no sense. So SML is a zoo. This is one of the highly talked about stock in the social media, right? I am picking up this particular impulse move after the stock came from the base. It made a high and then it is given a corrective move. It holds the 61.8 and now it started to move higher. Okay. So if I put only one. Okay. So did we talk about all the stocks? I didn't think so. Okay, I'm sorry. I'm jumping into stocks. So we had Cupid, we had Q Power. Let's talk about Dixon. Somebody asked Dixon. Sorry, who asked Dixon?
I think Rajshri asked about it.
Yeah. Okay, maybe she has dropped off. So I'll probably wait for her to connect with me later to answer this question. So force motors, what is the question on force motors?
Yeah, is it is it at a good level, like for a
Good level
pullback
for
trade,
what?
a full pullback trade? That is what I was.
Okay, so this is a weekly chart. So it made a high, it came back, and then this impulse move I have started. If you don't want to put it there, you can put it here as well. It's perfectly fine. So if you look at it, it's around 38.2 level. It tested below, it reclaimed, it's holding. 10 weekly is acting as a resistance. So it's currently here. This corrective move is not done yet. You need to see clear signs of, actually you can say this is a swing low, but I will want to wait for it to show some signs of upside move for me to conclude that the corrective move is done. So for now, I am assuming the corrective move is not done yet. So I don't know how much more it will retrace and how much more it will come. So I will wait for it to show to me that it is done with the corrective move. And then when it shows the signs of moving up, I'll probably look for a trade on the daily basis for a pullback trade. It's still holding above the 38.2, so it's good for now, but it's not yet ready for a pullback trade in terms of the price moves.
Yeah, thank you.
Indigo, what was the question?
Yeah, Bhaskar. So again, whether it is can we know from Fibonacci whether the corrective move has completed or not, or still?
So the dominant trend is uptrend.
Uptrend,
There is
right?
no
Yes.
doubt on that. This is an impulse move, right? It has given an impulse move. For now, I don't see any signal that tells me that the corrective move is done. It's more of doing a time correction. So probably it's waiting for this 40 EMA to 40 SMA to catch up.
Catch
I
up
don't
and
know
then.
what it's going to do. But for me now, this is it's just doing a time correction. There is nothing much that you won't make money entering now. If you're holding a trade, it's okay. You can hold it. If it's a positional, hold it. But you can't make money in this stock at this point in time. You just have to wait it out.
Yeah, I'm holding it. Just conscious of where to put the stop loss now.
So you will have to look at the retracement, right? If that is your question. So this is a swing low, this is a swing high. And see, in a stock which is doing a time correction, you are in a very tricky state, right? It's not going to violate too many Fibonacci levels because it is in a time correction. So you may then have to look at other confluences, right? It made a high, it made a low, it kind of made a high, it kind of made a low, but then by then it's already below the 50 DMA. It tried reclaiming the 50 DMA, but then it could not make a new high. It made a high, it's making a lower high. It's given back, it's fallen below the 50 DMA, and now it's even below
falling
the 50
again.
DMA. So probably if I were to put it in Stan Winston's stage analysis, right, I will say that no, put any of these swing lows as a support, trailing stop loss, and see that if it holds. If it doesn't hold, you exit.
Exit, right? Yeah.
I mean, it depends on what is your time frame, how you are planning to trade and all that. But these are some of the ways in which you can do it. In the case of a time correction, you also have to have a time stop, right? How long are you going to wait? If it's going to do a time correction for the next 10 years, are you going to wait for it? There is an opportunity cost. So you can't wait for it to complete the time correction forever.
Right.
At some point, you will have to take a call to say.
Because it was at the all-time high during August period, so I had entered at that point. But it is again at my buy point, so I was just thinking where to put a logical stop. So yeah, I got it.
Would be that it is in a time correction. So I will say this is now in stage 3. So whichever the swing low that I can see, I'm comfortable giving how much ever the profit. Accordingly, I'll pick a swing low. I will draw the trailing stop line, and that will be a line drawn on the sand. If that line is taken, I'm out.
Yes, got it. Thanks, Basker.
No problem, sir. This is ISMO. Again, I think it was a question from Rajshri. If she's around, we can talk. Otherwise, we'll move on. Okay, I guess.
Yes, I'm there, sir.
Okay,
One
okay.
second.
Hi,
Yeah.
hi.
So, should I tell you the levels from where I do the lines? No, I think it's pretty Oh, just 1 second, sir. I'll just tell you my levels. Just give me a moment.
Sure.
So ISMO, sir, I have taken my swing low as 241. I'm not sure if that's the right thing to do. And the swing high is, of course, the
Okay,
1300.
so you've taken this one, this swing low. Oh, no,
Yeah.
this one.
Would it be right, or should I take the next one, which is around 386?
So best thing is to go for the weekly, right? The
Yeah,
swing
weekly.
low that
I'm
you
in
pick.
weekly only.
So you have taken this swing low,
Yeah.
right?
Yeah.
You have taken this swing low. It has
Right.
come up and it has put up a small corrective move over here,
Okay.
right? So if you had done an extension from here to here, if you had done a retracement from here to here, right, you would have got a brilliant entry because it hardly
Right.
retraced, right?
Correct.
But then that's a hindsight knowledge. Okay, so
Yes,
you
of
can't do
course.
it now. This is
Right.
a new start
New
of the
swing.
swing, right?
Okay. So
So
this is the place.
you
Okay.
put it from here. This is the start of the new impulse move. You put it from here to the current high.
Right.
It's now resting around 61.8, right? If it's a positional trade, good, hold it.
Okay.
Right? If it's a positional trade, hold it. But if you are already in loss, right, you will have to see whether you want to hold it, whether you want to wait for it to reclaim all of these selling pressure and go. Because a stock coming up to 61.8 is going to take a much longer time for it to get back to the new high and more high.
Correct.
Okay.
Correct.
So depending on what is it's also about a question of money management, right? Whether you want to block your capital here, whether you want to wait for this stock to recover, whether are there any solid reason why you should hold this stock for it to recover that level.
Correct.
And then plan your trade accordingly, right?
So, sir, two things over here. What I would like to know is, like, I bought it almost at 600, and a lot of us would have done that. I made 100% profits. Ideally, what should have been my exit, and what should be my re-entry point again?
Oh,
I mean, if there was any,
no. I'm just trying to think through, right? Your point is, again, you're saying you entered somewhere over 600, right? Maybe when it's making a new all-time high and all that.
650, right? 630 levels means at 1300, I was at 100% profits.
Which is okay. So, I mean, that is gone. Okay. So I'm just trying to think, when you enter at 630 level, you were entering a stock already when it is in the part of the impulsive move. Okay.
Okay.
So let's shift to the daily. Okay. I think probably you guys enter over here, maybe enter at this break. Okay.
Right.
So now I will, just for this argument, sorry, argument is a bad word. Just for this discussion sake, I'm considering this as a swing low.
Okay.
Because I'm doing it on the daily, I can consider this as a swing low, or even better is this pivot, right?
Okay.
That gap up bar. Okay. On the daily, a gap up bar, particularly when it is with a catalyst, is a good zone to identify the daily swings, right?
Okay.
But bear in mind, this is not the start of the impulse move. The start of the impulse move is somewhere else. You are just plotting it for your convenience. Okay.
Correct.
So now it has violated 61.8. It has come this far below. Okay. It's around 7. It's actually showing signs of reversal. It's holding this area. So you could wait for it to see if it's coming above. Otherwise, you can put a stop loss below this level range, and then you can take the trade. But if your question is, maybe if I should have exited this stock when I should have exited stock.
Yeah, that's my question.
Yeah, that is your question. I wasn't riding this trend, right? Okay, so let me be honest. I wasn't lucky enough as you are to ride this trend. But after the stock has given an up move, when it comes back, if I'm looking at it as a momentum trade, I will wait until the 38.2 is taken. The day when the 38.2 is taken, I don't consider anymore it as a momentum trade.
Okay.
23.6, I would have been even more stringent with it, but given the profit margin, okay, when the stock gives you the profit margin, your heart doesn't allow you to diverse the stock so easily.
I agree.
It
There's a lot of
will
FOMO.
play monkey mind. Your monkey mind
Right.
will play a lot of game with you, right? So you be a
Right.
little bit more conservative. You be more considerate. You give a long rope and say, okay, 38.2 level. Now it opens all, closes all in gaps, right? You can't do anything about it.
There was a continuous low circuit, sir. Yeah.
Low circuit. So you have no
Yeah.
scope for doing anything about it. So okay,
Right.
then I will give 50%. It recovers the 50%. It gives a gap down reversal. That's a very strong signal, and volume is also good. So you
Right.
hold. But then 2 days later, it's facing resistance of the downward sloping 80 EMA, and it's not able to reclaim 21 EMA. Now this level, this low becomes my line of sight. It comes back, it again breaks, closes below the 50 DMA. I would have sold anywhere over here.
Exactly. Sir, can you just confirm if the blue line is the 8 EMA or
blue is 21 EMA.
blue is?
Blue is 21 EMA.
21.
The maroon is 8 EMA. This dark brown is dark brown or dark maroon, whatever it is. It's 50 SMA. This is 200 SMA.
Okay. So one observation which I want to make, which I used in force motors, is that whenever a stock runs very fast, generally when it breaks 8 EMA, it retraces for a long time.
Not
I think the best time is to sell it when it breaks the 8 EMA.
I mean, that's your.
You're using the EMA or DMA, sir? 8 exponential or daily?
8 exponential EMA on the daily basis. Okay. So one
That's
thing
just an
is,
observation I have understood but failed to apply sometimes out of greed, I guess.
No. I wouldn't agree with that statement, right? One rule, I think it came from one of the William O'Neill's disciples' book, right? Is that the 7-week rule? Okay. What is that 7-week rule? Is that if a price has a tendency to test and respect the particular moving average for a period of 7 weeks and then violates, that moving average is that violation is a sign for you to exit. Okay. So follow this 7-week rule. I think this is
whichever moving average it is, whether it is 8 or 20.
Whichever the moving average, the stock respects. So force motors, right? It tests and bounces off 21 EMA. It tests and bounces off 21 EMA, 21 EMA. It comes closer, it comes here. But this is the first time when it violated the 21 EMA.
Correct.
And I was writing it from here, somewhere over here. So the same greed that you talked about, I was caught up in that over here. Now I said, I know, force motors. It will not disappoint me. It will recover. It will make a new high. It did not make. See, here it did the same.
Trend was doing the same, I guess, always bouncing back from 20 EMA.
It went higher. It closed lower. I said, like, I would have been happier if it gave a high close. It opened. It gave a low. It came back and held 8 EMA. I will say until it closes below this low, I am going to hold. It came below. Many of my friends exited over here. I was caught up in greed and I did not exit. I held it. It came back and I proved to them saying, look how smart I am, right? I held it. It went up. It did the same thing here. Guys said, you are an idiot if you're going to hold it again, right? Because it broke above this height. And I said, no, I will wait for the 21 EMA. It behaved well over here, but then here it broke. My monkey mind did not allow me to exit in this bar. I froze. This is not something that I'm used to seeing in this stock. This is a change of character. I froze. I froze, it went down. I said, oh, it has taken too much of my profit. I'm not going to exit here. Then it started to show signs of reversal. And I said, like, no, brilliant. I'm doing the right thing. I was not acting in haste. When it failed to break above this high, I exited here. And I said, like, enough of letting monkey mind take the trade. Now my technical should take the trade. So I exited over here. And then it has come forward. Now, one question people keep asking, where is the right entry in this stock? I'm very sorry, I'm taking too much of time, but where is the right entry for this stock? Not to you, to anybody.
You mean after it has broken out of its all-time highs?
No, it made an all-time high, it has fallen. Now, if one were to take an entry, where would you take it?
After the breakout from consolidation.
No, boss, please. 61.8. That is a corrective move. So please hold on. 19,280 should be your safe zone to enter. Is that making sense? This is a corrective move. It has started moving higher. So now if it breaks lower than this low, then that means the corrective move is still continuing on. But assuming the corrective move is done, if it's consolidating, 19,280 is the level beyond which only you should consider buying the stock. So any other stock that I missed talking about? I think we covered every one of them.
Sir, Cupid stop loss?
Sorry, Cupid we spoke about, right?
The
What is the
stop loss
question in
price.
current stop loss?
Yes, sir. I'm holding that. Where can I put a stop loss?
When was your entry? Which is the swing low? Which is the this one swing low you
My
took
entry is
in
very low, sir. That's the 128 rupees.
128 somewhere over here.
Yes, sir.
So you entered around the breakout of the new high or slightly
Yes,
below that?
slightly
Okay,
below,
so
sir.
I'm considering this as an impulse move. Okay. This as an impulse move. Okay, don't mind, it's not too perfect. You can later on do it for yourself. So this stock is notorious. Okay, it's look at the bar range, right? And it's surfing around 80 EMA and it's coming and bouncing off 21 EMA and all that. So it's very difficult stock to trade. Okay, if you're holding it as an investment, it's a different story. But it's a very difficult stock to trade. Primary trend is up. It's having a strong uptrend. It's not even coming to the 50 DMA. So you probably apply the 7-week rule on 21 EMA and see what it's doing, right? Like it's testing 721 EMA, but it's not violated so far. So you could possibly look at any of these levels, and then see if that holds. If it's not, you may want to book a partial profit because it made a high here. It came back. It could not make a higher high. So this is ideally a risk factor. So you could place a stop loss below this doji bar, and that will also mean it's violating 21 EMA. With that, you should be looking to exit. I am currently not holding the stock. I tried taking a trade and I got fed up with the bar ranges because this is not going to give me any profit. I need little more movement. So the volatility is not there in this stock. So I'm not convinced with the move how I can plan my stop loss in this trade. So yeah, you have to be careful in trading these stocks.
Thank you, sir.
I'll just talk about one stock which is in the limelight right now, MTAR. Okay. This is a downtrend. Okay. This is a downtrend. The stock is in a wonderful downtrend, right? And then it came back. It broke above 61.8. Okay. And now it's in the higher zone. So now is the right time to buy, right? Now or even 2 weeks ago would have been the right time to buy this stock. It's behaving well, right? It has done with this downtrend. Now the impulse move is probably on the upside because it's making a higher low and all of it. So you could, if somebody is interested, you could plan your trade in that. Now, what if I switch to daily and look at what is the Fibonacci saying? I'd rather okay. I'm going to the daily. From the point of the low to this high, how did it behave? Right? Assuming, say, this move has not come. Remember, like this is the period when it was consolidating around 61.8. If you remember in the previous chart, right? The chart that the weekly chart that I showed, this is the period where it was consolidating it. It made this new high, it bounced back, then it consolidated, and then it gave a new high. Now, if I plotted Fibonacci from here to this swing high, it's holding 23.6, right? And it's also holding below the resistance level, above the resistance level. ATMA is respecting, it came, it bounced, it took the support of the ATMA. It's already above the 23.6. I should plan a trade somewhere over here. I should have. I am not holding a trade in this, but I should have planned my trade on it. So on the weekly, I saw that it has done a 61.8. Now I'm putting in the impulse because I know this is the impulse move. I'm putting in the retracement over here, and I should be planning my trade somewhere over here, right? Even though the stock has given a strong upside move, I don't know how much longer it's going to go. I think it's already extended. No. What is the Fibonacci level saying? From the swing high, it's come only up to 23.6. I'm taking an entry here, right? That's how you should plan the trade. So I just wanted to conclude the whole session with this one chart, which kind of like summarizes the multi-time frame view of the impulse move, corrective move, and then how do you zoom into the daily and how do you plan the trade. Any other questions, or I will hand it over to Puneet for his closing remarks.
Sir, this is Rajshri.
Sorry?
So may I? Rajshri,
Yeah,
may I?
please, Rajshri.
I
Yeah.
am extremely sorry my battery died, so I got knocked out of the meeting.
No problem.
Thank you, sir, for the analysis
My
on ISMO.
fault. My fault. I
Really...
took it so long for your battery to die.
No, sir. I was in session since 9. I guess I didn't notice that the battery had exhausted. Sir, would you be kind enough to also analyze Dixon, sir? ISMO was excellent. I mean, I really understood how.
We actually opened the chart, but you were not
Yeah,
there, so we
Dixon weekly,
moved
sir.
on.
If I'm not mistaken, sir, can we see a retracement from first 0.5 to 0.23? Am I right about that?
Rajshri,
Yeah.
what is the primary trend in this stock right now? Is it in an
Uptrend
uptrend?
and
Is
now
it in a
sideways.
downtrend?
Uptrend and then now it is sideways, I believe.
Sideways. So it is not in a trend. It's currently in a sideways.
Okay.
Now, what is your question now?
So daily I can see a 0.618 retracement.
From where?
Now, from where is a big question. Okay, just
See,
1 second.
because the problem is in a stock which is in a sideways move, you can't plot. There is no impulse move. There is no corrective move, right?
So there's no point in trading this?
No. Yeah, obviously there's no. If you want to trade for a shorter duration, you have to switch to the lower time frame, which is daily, and then treat these moves as the primary, as the dominant move, and then these moves as the corrective moves, right?
Correct.
But then you still are trading in the dominant trend, which is not a bearish trend. But the stock does not have the firepower for it to rally.
Okay.
This is like you are trying to swim in a lake. Okay, you will only move forward with your own effort, which is not going to be high. In contrast, you imagine you are swimming in a river, which is water is flowing forward. Even with very minimal hand movement, you are going to go much further, right?
Understood, sir.
So that is how, if you have to trade this stock, I will want you to ask yourself, why did you choose this stock in the first place to trade? Why now? Why not wait for it to make a new high and then you trade?
Correct.
Let it start a new impulse move, right? Let it start
either upwards or downwards, wherever.
Exactly. I mean, obviously, as a cash only trader, we don't trade downward, but this is a FNO stock. You can trade it on the FNO if you wish to, right?
Yeah.
So you can trade it on the downside on the FNO.
Okay. Okay. Got it, sir. Fine. Thank you so much, sir. Thank you.
My pleasure.
Wonderful session, sir. Thank you so much. Thank you, Puneet, sir.
Thank you. Yes, Rudra Prasad.
Yeah, sir, thank you for the session. This is a continuation question to what we have learned so far. One is like you have told that in some of the cases, the retracement or impulse move is not a sizable move. So how do we decide that whether this particular move is a sizable to have a logical Fibonacci retracement drawn, or it is not? How do you decide?
First thing is you should get a confirmation that the corrective move has ended, right? And then you judge the corrective move distance of the retracement from the base and the number of bars it has taken for that retracement. So if the retracement is shallow, right, it's just that the prior impulsive move is very strong, okay? And then you can trade on the long side in that case. But if the impulse move itself is not too far, right, the probability of the strength of those levels is questionable.
Okay.
I hope I am making sense.
Yeah.
See, it's a pure judgment, right? There is no other way
that's
of
what
doing
I was
it.
trying to understand. It is a pure judgment.
I mean, you will get it by experience as you start seeing more charts.
And there is another thing, there are stocks after IPO opening, it goes for downwards, creates a cup, and then it breaks out and goes along. So if we want to trade this kind of chart, how we should, draw the retracement and the extension? Like if I take an example of Eternal.
So,
when it is going down, forming a cup, and then it is breaking out all-time high and going above. So at which level I should follow the retracement,
So
and
again,
from which level I should start trading the extension?
good point, right? And this is what I was talking about with regard to the HDB financial services. In this case, it opened, it went sideways. This is eternal. It formed a swing high and then it formed a swing low, right? I will plot the Fibonacci retracement from the top to bottom because my dominant trend right now is down.
Right.
Okay. Wait for the stock. So just for better readability, I'm moving it here. Wait for the stock to recover 120, which is 61.8. That happened after how many weeks? Okay. It formed the swing high. It came up to 120 somewhere after 106 weeks, which is 2 years. Okay. It doesn't make sense for you to hold the stock until it's doing all of this. Let it come up to 61.8. Then you look at what the stock is doing. It made a new high somewhere in more than 2.5 years. And now it's moving higher. Okay. So it's when a stock, newly listed stock is going down, forming a cup and handle is all fine. But has it established a dominant uptrend? Right? Has it established a dominant uptrend? If it has established a dominant uptrend, then you look for, is it an impulse move or is it a corrective move? It's an impulse move. Then wait for the impulse move to finish and let it show the corrective move. Once a corrective move shows the signs of fatigue, right? The corrective move is no longer there. Then you plot the Fibonacci extension to see how far it will go. But while the corrective move is happening, you plot the retracement to see how far deep the corrective move is going for you to decide how far it will go. Now, for this, just because we are in the discussion, I'll take this as a swing low. I'll plot here as a swing high, and I am plotting here as the thing. Now, look at exactly at 61.8, the stock is unable to break higher. Right? We are talking about it. I have not even looked at this chart. It's giving exactly a bearish pattern over here at 61.8. So if you had entered even this cup and handle, right? This is a cup, this is a handle. If you have entered over here, you must be ideally be looking to book partial profits, scale down at this level itself. Right?
Right.
That's it.
Yeah, thanks. Cleared a lot of doubts.
Okay, thank you. So Jagdish, any
Yeah,
other question?
Bhaskarji,
Yes, sir.
I have two questions actually. How do you select your stock universe?
Okay, I don't complicate it too much. I look for stocks which are within 52-week high, 15%, within 15% of 52-week high. And then I select stocks which are listed in the last 1 year. These are the two main lists that I pull out. So now that I've got the pro setups, I'm exploring some of these filters and looking at stocks which are consolidating around 10, 20 moving average, 50, rising 50 moving average, because I'm primarily looking for these things for this one, swing trades. So now I am gradually shifting. My market smith thing is expiring by end of this year, and I don't plan to extend it. I'm not happy with their quality of data, so I'm moving out of it sooner.
Okay, thanks. Okay, another question is regarding your long-term investment. Are you applying this Fibonacci retracement and extension to those things also?
I don't put in so hard. My long-term investment is primarily I try to enter a stock when it is early stage 2. I don't rush in to buy it at stage 2 breakout, but I enter early stage 2 breakouts, and then I ride as long as like the stage 2 persists. Whenever it shows signs of fatigue in terms of the rally on the upside, Only then for the last impulse move, I put in Fibonacci retracement, and if it doesn't hold 50%, and if there are confluences, I exit. Otherwise, I don't carry much. I don't want to keep managing my trades, right? If it's my investment, I don't want to keep buying and selling and all that.
Yeah.
So I put in my investment and I let it ride. Q Power is something that I entered soon after the breakout, and I did not do anything. For me, that corrective move and impulse move, as long as like it's continuing, I'm fine. I don't get worked up with it. I let it run. And contrary to what you will normally see on the internet, in the Twitter and other things, right? Like when people say, oh, don't trade 5% secured stocks. I don't trade 5% secured stocks and all that. And on the contrary, I have made best of my profits from those stocks. There has to be a fundamental catalyst, and the stock has to have a valid reason why it is rallying. And if that happens, a 5% secured stocks, which is hitting the 5% upper secured back to back to back, is what you should be riding on. Because the same logic, right? The retracement or the corrective move in those stocks, even though it may be hitting consecutive lower circuits, it will never violate the 50% levels of the previous impulsive move. And if you're sitting with a decent profit in those stocks, it will retrace up to 38.2 or slightly below that. And then within few days, it will again restart its upside move, right? You pick up any 5% upper circuit stocks from the past and you look at the charts, you will find it out. Every one of the corrective move will not be beyond 50% if there is a real reason why the stock is rallying. If it's a pump and dump, I can't help it. Like Nitin Gadkari's son's stock, right? I can't guarantee that. But if it's a qualitative stock, which is rallying because there is a good fundamental catalyst behind it, 5% upper secured stocks are the best ones to compound your capital. So I love those stocks. I don't shy away from those stocks. I just need to have a good storyline why I should be trading that stock.
Thank you, Bhaskarji.
So thank you so much. I'm very sorry, guys. This has taken really long than what I had planned. Puneet, any comments? Any other questions? Anything that you guys want to ask, please shoot it on a private or on the group. But if you're putting it on the group, please tag me so that I will not miss out.
Right.
And even if I don't respond on any questions, please put it on DM to me so that I will come back and answer to your question.
Yeah, hi Bhaskar, this is Amit here. I will just make it very short. Thank you very much for the presentation. Thank you very much for sharing all this lovely, interesting this thing for you. I want to know that what are the other filters which you use to select these stocks? You can probably share it in the group also. And how can we do this on the
No, when you say other filters, what exactly you mean?
Other filters, apart, like you said, 15% from the 52-week high, and any other filter in terms of using fundamental filters for selecting, making a watch list?
I have been sorry. Yeah, Puneet.
What I will do is that I will sit with you and we can have a ready-made template that people
Yes,
can
perfect. Perfect.
See, so very simply, if you're looking to swing trade, Amit,
yes,
refer to the earlier conversation what Puneet had made, right? Refer to that, and you just have to apply this Fibonacci concepts on top of it for your pullback trade mode. This is all about pullback trades. If you look at it in a holistic way, right? Your impulse move and corrective move on the daily in a stock with a dominant uptrend of the weekly on the upside is pullback trades.
Okay.
Right. So you can pick up everything that you can do as a pullback trades.
Okay, I'm sorry. I'm not aware about that pullback presentation because I've just joined recently. So
okay.
So I will check with Puneet on that.
It is one of the videos that is there. You can refer to it. Any other questions, feel free to shoot it one-to-one and I can definitely help out with it. But in summary, if you go back and check out on the videos posted by... So essentially this whole discussion, this session was the idea that came from that session where he had said that you can do pullback trade using Fibonacci, and then he accidentally said, I have not used it, so I don't know how it works. And then I said, I have used it and I can share. And that's how we started having this discussion. So you can definitely go watch that video, and you can follow everything that he has said in that session for pullback trades, and then just overlay this on top of it, right? This is basically gold plating your pullback trading. That's it.
Surely,
link-
surely. That will be great help. Yeah.
Yeah.
That meeting is also in one of the pinned messages of the group.
Okay, okay, Puneet, I'll check that. Yes, yes.
Yeah. So Puneet, over to you. Any other comments, or we are done?
So much for conducting such an insight.
No, I'm very sorry. I didn't realize I will go on for this long, but thank you so much for patience.
Very grateful.
Yeah, it's such an exhausted session for you. So thank you so much for sharing your knowledge, sir. And
sir.
yeah, any questions that any of the members will have, you can always ask in the group. Basker ji is always there.
Yeah.
Let's conclude the session now, and we look forward to have more sessions with you, Basker ji. Maybe, kind of a session where you can share your best trades of the year and why you took them, how you trailed them. Yeah.
Sure.
Maybe-
We'll probably do it as a positional investing and stage 2 rally and positional investing. I can pick up some of the stocks that I've traded from the past, and I can share that. We can do it some other time.
Maybe a bit elaboration on how you differentiate between positional and swing trades while on day-to-day basis.
We can do that. Yeah.
Great.
Okay.
Thank you then, Basker ji. Thank you so much.
Thank you.
Thanks, guys.
Thank you,
I'm
Basker
sorry
ji.
for such a long
Thanks,
duration.
Basker ji.
Yeah.
Thanks.
Bye.
Thanks for you.
Thanks.
Thank you. Bye.
Thank you, Bhaskar sir.
Thank you, sir. Bye-bye.